Good to see a number of you. What's up, guys? All right, let's get this started up. Let's get this whole party started. I got a few things I want to talk about today. A few things I want to work through. What's up, everyone? How's it going, guys? All right, very quick. Can everybody see my screen and can everybody hear me? Yes, and is the audio is clear? It looks like it's picking up pretty well over here, so this looks good. Sound and video, okay, sounds good. Very good. All right, what's going on, everyone? How's everyone's weekend going? And how's everyone's trading week? Those of you that have been here for a while should answer that. Pretty good. Good stuff, man. Good stuff. Finally clicked. Hey, that's always a good thing to hear. Was good, fam. Watching World Cup. Oh, I didn't know. Is that today? New here. What's up, Talon? Good to have you on. Backtesting, one of the best things you can be doing. Good job. Putting yourself ahead of that 90%. Got funded this week. Congratulations, Jeremy. That's huge, dude. Send me a little certificate. Send me a photo in like a private DM, and I'll get you dripped out in a golden name or whatever. Backtesting the World Cup. Nice. All right, guys. So looks like we got just over 100 now. Cool. Seems about normal. So very quickly, we're going to jump right into everything. I got a few things I want to cover today. We're going to do a little bit of an interactive where we're going to break down a number of things. I'm going to break down this trade for you guys, and we're going to do it a little bit more interactive, kind of walk through the step by step with the rules that I share with you guys from a standpoint of section 4. So we're going to break it all down, side by side once again. Why I can't see you? Because it's in OBS. You'll see me in the recording. You just won't see me if you're here, right? Because it's recorded right there. You see, this is me. What's up? So we'll talk about them in Confluence, and today as well, for anyone that's been here for a while and has worked through a good confluence of a lot of the webinars, we're going to be breaking into a little bit of a more in-depth way to view things. It's going to be re-bringing up something that we used to use, or that I still use, but I'm going to show you guys how to utilize it. Yeah, disclaimer, it's coming in a second. In terms of, how I came to use this zone, and if any of you remember during this week, this was to the pipette. Oh yeah, disable annotations, thank you. There we go. And if for anyone that remembers this week, so I sent this bad boy out, and I'm going to show you guys in a second, but this moved to the pip, right? This guy touched right into whatever this was, right? This perfect refinement somehow, and then moved away from there, and that's where I got my trade from, right? And just to showcase that before we even start today, I'm going to show you guys very quick that this was all, of course, sent out before. Again, I don't do this to prove anything to you, but more so to teach you to see that the same things that we see happen time and time again are repeatable, are analyzable before they ever happen. I'm going to show you guys that right here. So this is what I sent out that day. Right here. So you can see when this was sent out on the 30-minute, this was that refined zone. We'll talk about how we refined it. We'll talk about all of it in relation to the course in a second. Everything will be broken down. Don't worry about it. Let me actually, here we go. So remember this really quick, just for a number of you. Remember this little wick here. Remember the 30 minutes, just kind of covering most of this candle, right? We'll go to the 30-minute here, and lo and behold, here's that exact same thing, and here's the move to the pipette. So I had a very, very clean analysis and a clean refinement that ended up playing perfectly. And we're going to talk about how we ended up with that, how I'm using my rules of MBs, of structure, of context, higher to lower time frame, and how I use S&D 2.0 to also determine refinements. So we're going to talk about all of that today. It's going to be a really good time. As always, anyone that's new here today, welcome. I'm happy you're here. You should, as I write in the order, if you're brand new, you should be reading through the welcome read this first, followed by the start here order. And as a lot of you will know, I basically say that no matter who you are and how new you are, always start with the most recent webinar, so good job if you're here today, and start showing up to the webinars. Even though a lot of what I say is going to be confusing, is going to seem way beyond your level of expertise, you can very, very quickly climb the ranks of proper knowledge, and you can put yourself ahead of almost anybody that's been in this market for years on end. I don't care who you are, how long you've been in these markets. I've had a lot of people message me and they're like, Mr. Ment, I've been in these markets for 6 years, so I know what I'm talking about. I know what true dedication looks like, and now I need my answers. And I'm like, dude, you are as knowledgeable, if you're not profitable yet, as the person that joined here for the first time that hasn't ever touched a chart. Because the reality is no matter how long you've been in these markets, it doesn't really matter, because there's two types of traders in the world, right? One is the one that understands consistency and profitability and is consistently working on that and is already either consistent or profitable. Or two, someone who isn't there yet, right? And then you have the subsets of that. And if you're not there yet, a lot of the time you can let ego take over, right? And this is in the standpoint of like, oh, I've been in the market 6 years, I know more than the next guy. No, you don't. Yeah, you have some bit of knowledge that lets you potentially know what's bad, what's good. But if that person that's brand new joins up and just decides to say fuck it and work through everything I give to them, they are going to be ahead of you even if you spent 6 years in this industry. Because the reality is ego can get in the way. Jumping courses and mentors gets in the way. The way that you, the kind of quality you put into testing, to hearing things, to following education is going to affect who you're going to be in the next few months. So, with that knowledge, make sure that you don't come in thinking that, your ego puts you ahead of everyone else. You know something someone else doesn't. Allow yourself to be in the space of, I'm brand new. I'm going to follow this pure. I'm just going to listen to what mentfx says, and we're going to see what happens. And let me tell you guys, this is no guarantee whatsoever, but the people that I've seen just commit to the process that is taught here and get through all of the course content like I expect them to go through, end up understanding everything they ever need to know about properly building consistency long-term in this market. So if you want to be part of that, then you know exactly what kind of steps you need to take. Now, before we jump into it, as always, let's drop down our disclaimer, because again, not everything I say is supposed to be perspective based only. You need to do your own testing, and you need to realize that I don't guarantee any results for you. So welcome. The disclaimer, most people in these markets lose. 95% of people probably lose. Even if you're here and you're brand new, you're probably going to lose unless you follow everything that is taught to you. And even that is not proof that you're going to be able to be ahead of everyone. But based on my personal experience and what I've seen from people, it's a very, very good path to getting what you want. Anything I share today and say here should be looked at as only perspective based and should be looked as a completely demo simulated environment. So of course, please make your own choices. Any money you make or lose in this market, whether you're on demo or live, is completely your responsibility, and I will not ever be held liable for any of that. All right, so we're going to jump into it. So again, if you're brand new, welcome. I'm happy to have you here. There's going to be a lot of things talked about today that might be confusing, but that's a good thing. You're working towards seeing exactly what we see, and as long as you continue working your way up, you're gonna learn a shit ton. Okay, so very quickly, I'm gonna read over some of the stuff here, just answer a few questions if I can, and then we're gonna jump right into it because I have a few things I want to deal with today. I just do my best to try and get it out to you guys in the most clearest way possible, because technically I could literally, like, in my brain right now, I have about 20 hours of lecture that I could go on to break this down in terms of, proper refinement, thinking about the market, psychology, all this stuff. So like in my mind right now, I have 20 hours that I want to go straight for and just hit you guys with. But that's not going to be functional for me or for you. So instead, we're going to do our best to simplify versions of it, but always remember that, these markets aren't I learned the one-time little entry criteria and I'm ready to fully understand these markets, because a lot of the time there is a ton of context and experience involved in making decisions and how you make those decisions, right? I saw a lot of people trading EU this week. That's fine, right? But as a lot of you might remember from webinar 76, which was the offline one, I released it for you guys, I spoke about how I honestly didn't know where this market was heading, and due to the fact that we had multiple MBs on the top side here, I didn't want to follow any of this. And all I said in that webinar was, I'm not following EU at all. Yes, it's bullish and bearish. I'm not following this until it gives me something clear. And I walked away from it instantly. And upon walking away from it, I went to something like EG and GJ and sent out these two POIs to you. Okay? I told you guys I'd be looking for shorts here, and I'd be looking for shorts on EG from here, and then follow that down. And, beautifully enough, every zone I sent out beautifully mitigated, hit, continued the move, absorbed, continued the move, hit, and every refinement I sent out, as per the mentfx trade ideas, literally delivered like to the pinpoint, right? Sent out this, then sent out this that morning, showing you guys that I'd be following this refined area. Price came in, and I told you guys exactly what kind of confirm I'm looking for here. So this is section 4 double MB confirm, and I'm going to break this all down very soon. Double MB confirmed it instantly, got in on the 1 second, managed that to the break even, moved to break even, right? Continued to hold this to the first partial right here. First partial began to move, didn't close anything. First partial was met, continued that through. Second partial got met, continued that through. third partial got met, continued that through, never ended up delivering to the fourth partial, and came back up to break even, right? So this whole thing was shared with every zone before it ever happened. Now, again, I'm not doing this to sell you because you're already here, but I'm doing this to show you that none of this is like, oh, he just backtested it. Oh, he just hindsighted those zones. This was all, and for any of you that watch webinar 76, you guys can talk about it a little bit right here. This was all spoken about beforehand. I spoke about how I did not want to follow any of the XXX USD pairs because of their current context, which again, there's a lot that goes into context, but we just came out of a super bearish market that started making an MB to the top side. And because we're aware of how trends, you know, actually develop, where they don't just develop like this, but they more so develop like this. And when they come to an end, they usually undergo multiple MB back and forths until you get the clean 3 box that then delivers. And this is usually what markets deliver like. With that knowledge, we know that this market here, EU, is most likely going to result in a more back and forth kind of price action rather than a continuation. And until we get very, very clear displacement on dailies and weeklies, proving to us that a bullish market wants to hold, there's no point to follow these markets like we have been for the last few months, where we basically get on any session and follow the first like clean breakdown and start following anything to go short, right? If you start doing that here with the bullish or bearish side, you're probably going to find yourself on the wrong side multiple times. Why? Because the context is no longer there for a one-sided clear market, which is why I spoke about in that webinar 76. So if you haven't seen it yet and you're brand new, make sure you write it down right now. After this video, watch webinar 76 to see exactly how I spoke about this and told you exactly that I would not be following this market. You know, it's all there. It's all available, all before price ever delivered. And, you know, and then, I mean, this week it just delivered beautifully. And you guys saw that. So, you know, there's an element of context where you walk away from a market that isn't clear to you or isn't delivering clearly or is making multiple MBs to the top side, so you know it's more likely to start absorbing or failing. So you look away from it and wait and instead go and follow something that's more clear to you. And as a result, you are rewarded for that kind of patience, right? The reality is I probably wouldn't have traded anything if there wasn't anything clear like this. And we're going to talk about exactly what I mean by that clarity today as well. But yeah, just something that's really important for a number of you to consider, because there is a stigma. It's a cancer. It's a disease that when people get on their charts and start analyzing, they think because they drew a zone, or they think because there's a break of structure or whatever, or there's a new MB, that it needs to be the start of this huge move that's about to happen. And if they don't get in right now on Monday, on Sunday open, they're going to miss the whole thing, right? And this kind of cancer, this kind of disease will eat away at your account over and over and over again until you decide to, one, properly do the data collection so you know that setups are available all the time in good conditions, and two, actually be patient enough to find those good conditions. Because I've also seen the issue from a lot of people of, oh, on my back testing, I do so well. All my data collection is so good. And then I get on the live and I just lose everything. And I'm like, well, I'm guessing your backtesting probably spans a few months of data. And then you get live, and on that first day, you're taking 5 or 6 trades, which would have never happened if you were in a backtesting scenario. So what's happening is you're getting used to the fact that, oh, when you're backtesting, you're getting all these trades that you can record. And when you're live, there's not as many trades, of course. So instead of waiting and being patient for the market conditions that literally meet everything that you look for, you just start forcing anything. And when you start forcing anything, like going long here or going short in here and going long here and going short in here, guess what? You get caught in the middle of unnecessary chop. And when you get caught in the middle of unnecessary chop, does anyone know what happens? You lose, you die. Yeah, well, you lose trades back and forth nonstop. You go on losing streaks, and you start wondering why your live trading isn't as good as your backtest. But what's funny is if this was a backtest and you were looking at this and you'd be like, okay, the market was bearish. It started shifting on the daily. It made a bullish break on the daily. Within the bullish break on the daily, it's made multiple. It's made 1, 2, 3, absorbed the 3, then made a 1, 2, 3, 4 MBs to the top side, 5 MBs to the top side. It made 5 MBs to the top side. And now, do I want to trade this off of this completely crazy price action, or as a backtester, am I just going to wait for a clear range? A lot of you at this exact moment would be in a backtest would say, all right, I'm waiting. And you will literally, click your buttons like this. You'll just click it ahead a few days. or even a few months, and you'll be like, oh, this is good price action. But what's funny is during a live, there's no such thing as clicking this forward until you're happy with the area you are. So instead, you just go, all right, fuck it. This is what price is giving me. I gotta trade it. And then you're going long and short in these areas, and you end up on the side that now writes into the hashtag trade talk, right? You go into your trade talk and you're like, guys, what do you think about EU? I'm long, but I know mentfx said he's short, and I haven't seen the webinar, but look at my long. What do you think? Is it good? And already, you know, like this question right here is one of the hardest things to deal with because oh god, the amount of extrapolation. I could literally go for 30 hours right now. Okay? I could go for 30 hours right now answering this one question about somebody asking me about going bullish here, right? Because then I have to literally go into multi-time frame analysis, MB analysis. Understanding 5 MBs does not give you optimal setup criteria. Understanding how trends work from transitioning from a bearish to a bullish, how it often looks, how accumulations actually play out, how they don't just end up going breakdowns, break up, start following the breakup, super clean. I need to explain how to use S&D and refinements because some people are sending out this and going, hey, I'm trading the MB. Why am I taking so many losses when they're using more than 50% of the range? And guys, I'm not doing this as a joke. Someone literally sent me this week in a message, in a DM, and said, hey, I have this MB and I confirmed here and I took multiple losses. Well, no shit. You're using 50% of this entire range as an area to confirm. So of course, when price gets there, if you're confirming a very low time frame, you're going to take loss after loss after loss after loss after potential small win after loss after loss after loss after loss, right? So this is why it's so sometimes hard for me to see these kind of questions because, you know, I want to help you. But when I see something along these lines where it's like, hey, look at this. What do you think? The answer is yes, it's good. But you have no idea why it's good. Therefore, what you're doing is terrible and very bad. And actually, if you really consider the context, this is a terrible trade, even though it meets what we do here, which is the simple 3-box setup, right? This is right here is a 3-box setup. Fine. You're correct about that. But the context of it makes it a terrible setup. And most people that were following this were getting liquidated left and right because of the context of this market, which again comes from a higher time frame not putting in clear structure, from a lower time frame putting in multiple MBs to one side, therefore making them less likely to hold, and people that are not refining but instead using larger zones are going to take more losses within those zones. So this is the hard part about seeing a question like this because I want to help you. Most people here want to help you. But then you just get the classic answer of, bro, watch the course. And you're like, dude, I get I need to watch the course, but can you just answer my fucking question? It's an easy little question. And I look at them and I'm like, oh my God. I could get on a call with you right now and talk to you for 30 hours and you still probably wouldn't understand it because there's so much depth to this, right? So it's such a hard thing to deal with. And this is why you get this answer. If you're brand new here, this is why you hear the answer of, watch the course, watch the course, watch the course, watch the course, because it is a buildup of a foundation into complete refinement and understanding of these markets. And you get to see it firsthand, how context puts in motion proper and good setups, which is why you'll see me look at something like this last week, right? So again, a lot of you can do this for yourself, but a lot of you can go into our big boy webinar recordings here, jump into webinar 76, like I just said, right? If you watched this, hopefully you did, and go, okay, what was mentfx talking about last week to me? What did he say, right? He came in and talked for literally 20 minutes about how he didn't want to follow EU due to a number of reasons. What were those reasons? Okay, so he didn't want to follow EU, but what did he want to follow? What did he think was a clear market condition for him to follow? Let's see. EG with this zone, the exact same thing, and he told me that he liked EG's movement. Why did he say that? Did he just randomly choose EG, or was there a context there based on what he's been teaching me for the last X amount of months or last X amount of videos that I've seen that is worth taking, right? Spoke about all of this, spoke about exactly why I want to see it go short, and spoke about how I'm going to follow that through. And then I also said GJ was very clean, and I want to see GJ. And then, let me show you guys what I did here. Let me go a little bit further in the video. Look what I did. End of the video. Does anybody see what 2 markets I pinned and flagged in terms of cleanliness and which ones I didn't. So again, all before it happened, all non-hindsight, all this fun stuff, whatever, you know, like many people are in this whole like, oh, but your zones only work because you show us it after the fact. No, bro. These were pinned for a reason. Those are the 2 I actually sent out. These are all the markets I didn't want to look at and said were not worth looking for me. Even though they have potential moves, I don't like them. And guess what? Do you guys want to know which one of these 2 actually delivered? Both of them. Both of them are still delivering. Of course, I didn't take anything on GJ. So let's go like this again. Let's move this over. So I didn't take anything on GJ because it just took a while to deliver. Let me go like this again for you guys. So GJ never delivered until the end of the week, so I didn't follow it here. Of course, into the next week as it breaks down, I'll probably look to follow this because this bias still stands, right? Let's go ahead. I don't know why my Control Z isn't working, so I just have to delete stuff manually right now. Maybe I can close this. Hold on. Let's do it again. Refresh. Yeah, maybe that'll work. So I sent out this and I sent out this. And guess what? It delivered perfectly. And I sent this out throughout the week to show you guys, you know, how I'm going to follow this through. And guess what? That all comes from this contextual thing. So again, you have it all available to you as well. It's all here. How did he do that? Why did he pick that market? What did he say about the market that was clean to him that wasn't clean on the others? Why is it that he's talking about this? What did he teach me in this video, right? This is all taught. It's so crazy in my mind how much you have access to, but a lot of people don't want to utilize it, right? And again, I say this because it's so vital that a lot of you notice when these kind of questions are asked, it is so hard to give you an answer like, hey, EU, is anyone else long on it or are you short on it? It's like, what kind of question is that? You need to go through the course. I don't want to mute people that are brand new because I want them to have a chance to like be told to watch the course. But at some point, a lot of you need to make that decision. So if you're brand new, get to the fucking process because you're going to be ahead of everybody so quick. I know my boy Snow literally took 19 days to watch everything and just said, fuck it, I'm committing. He literally just said, you know what? I'm done. I'm going to do it. Right? He even sent me this. He's like, sorry, Snow, if you didn't want to be publicized by me, but it is what it is. He basically said, hey, I wanted to say thank you. This was me on the 9th of October, about a month and 11 days ago. He was brand new and he asked something about change of character. And I literally said, dude, you're literally not going to make it anywhere if you keep doing this. Watch the course. And he just said, okay, sorry. And that's it. That was our exchange. And a month and 11 days later, he just stuck to the entire course. He watched it all. He doesn't have a single question. And our boy Snow is one of the better members of this group now that understands everything that I bring up now. And it only took a month and 11 days. How fucking crazy is that? There is no place in the world. You will never learn how to be a lawyer in a month and 11 days. You'll never learn to do anything in a month and 11 days. This is insane. He understands the entire fundamental approach to this market now. And now all he has to do is commit to the process, and he knows it. He knows it. And that's all he had to do. So many of you, I know you don't all have the time to sit there and watch it all that fast. That's fine. I don't expect people to watch everything in a month. I don't offer a monthly charge for my program to have you pay for 1 month and leave. I offer the monthly so you can decide if it's worth pursuing an education here and then either A, leave, or B, sign up for the yearly or keep paying for the months. Because again, you will not just learn everything in a month. I mean, this guy kind of did, but you know, realize why I offer what I offer the way I do. I could very easily, what I believe truly, guys, okay, so I'm gonna be truthful with you for a second. What I truly believe is that I should get rid of the entire like monthly and yearly payment, and I should charge $15K and let people sign up as a one-time fee, $15,000, and they can have the access forever. Now, I don't do that because I don't want people that are not committed and aren't truly committed but want to appear to be committed to join and then be here. I'm not interested in having people that don't want to work on themselves and actually improve. And I know that people that even spend $15K will still be in this dumb mentality of, I don't want to learn, you know, I just want to kind of look like I'm learning, or I want to feel like a trader. I'm going to leave you guys with one quote really quickly. I read this quote somewhere and I liked it a lot. And basically the quote goes like this. It went something like this. It says, lazy people will put in an ounce of work, right? or like will put in, you know, what they believe to be immense amounts of work, and they'll wonder why they aren't profitable or they aren't successful yet. But then the people that actually commit to processes will put in over 1,000x that amount of work and still wonder to themselves if they're being lazy. That's usually the difference between someone that does end up making it in a given business and someone that doesn't. Okay? So a lot of people that think they're, oh, I'm fucking working, I'm chugging along, are actually some of the laziest of all. And some of the people that are constantly asking themselves, am I doing even enough? Am I doing enough? And consistently pushing and pushing and pushing, those are the people that end up in places they can't even imagine within very, very short amounts of time, right? Time is one of the biggest scams. Time is a scam, literally. Because, you know, like, what's funny is if I go to a website creator and I'm like, hey, I want this done, they'll be like, this will be about a 4-month project. I'm like, what? Some of the best website designers can can make you a website that is going to be better than anything anyone has ever seen within a week. Okay, this whole time thing is bullshit. Put in quality into what you do, or you're not going to get anywhere. And constantly wonder to yourself whether you're doing enough, rather than, you know, letting the ego get in the way and thinking you're doing, you know, more than enough. Because I've seen that. I've seen people message me and they're like, you don't understand, Ment. You don't know me. Don't tell me I'm lazy. You don't know my past. And at the same time, they're sitting there going, but what is the answer here? Is EU bullish or bearish? And I'm like, so you're committed and you're not someone that's lazy, but you're asking me the laziest bottom line kind of question that I would expect from someone who's first timer. That's a complete first timer here, right? So it's something that you need to look inwards on. I can't fix that for you, but it's better to think you're being lazy while you're putting in a shit ton of work, rather than to be putting in a little bit of work and thinking you're doing enough to be where you want to be. That's usually that's usually the thing that's going to separate you from, you know, real consistency or success in any business, and none at all, right? So there you go. I don't know what point I was on, but watch the fucking course. Watch the course. It's all for you. It's all here. You have access to it. There's no paywalls past what you're paying here. So use it all, okay? Use it. It's for you. I want you to learn, and you will learn. I don't even want you to keep paying me. I want you to pay me, and if you have the tool set and you don't want to be here for the community aspect, or to have access to me, or to have access to other people, that you can just leave. You can freely leave and have all the skill set and tools you ever need. I want that for you. I need you to be able to, in about 6 months from when you first join, to look at me and say, thank you, I'm off on my own now, and I don't need any of this anymore because I have every skill set and tool in my toolbox that I'll ever need to build up a house, to fix the house, to live in a house forever, to fix the plumbing, to do anything I ever need. Thank you, goodbye. Unless you want to stay for the actual, you know, webinars, for the people, for access to just people, to me, whatever, then great, for by all means. But if, like, I'm sure some of you have been in these mentorships where it's like, you got to stay on, you got to stay, you're not going to learn anything if you don't stay. It's like, no, I need you guys to want to leave if you want to leave. You are given full independence, but that independence is only going to be reached if you actually commit to the stuff that I spent years of my life putting into, you know, video content, and spent hours refining and teaching. And if you ever think your one video or one question about is EU bullish or bearish is going to fix that, oof, damn, you are fucked. All right, enough swearing. I'm sorry for anyone that has kids in the house. I apologize. Let's jump into some fun stuff here. Who's ready for the sauce? Yeah, we got some sauce playing out today. I got some stuff I really want to talk to you guys about, and we're gonna do an interactive. We're gonna do a whole breakdown. There's your 30-minute rant. I had to be off for a few weeks, but it's so nice to be back in the community. What's up, Anton? Happy to have you back, man. Gasparov. You sound like a chess player, bro. Scared the shit out of me. I'm sorry. Just making sure this is recording. Okay, we're good. All good. All right, we're just going to get through all these really quick, and we're going to jump into the main part of today. Now that I'm fired up, now that I'm ready to really teach and hone in on it. Too busy for work, so we'll back test the higher time frame system. Check an FMB for 30-minute, 1 hour. That's great, dude. I'm happy for you. Why I can't see you, we already went over that. What's the difference between a linear versus logarithmic trading view? I'm interested in trading stocks and don't know what's better. It's just for seeing stuff. Like if you're on Bitcoin and you're on auto, right, and you zoom out on like a daily, you see how hard it is to see shit? right? Or like on a monthly. See how hard it is to see stuff? But if you go to log, it just cleans it up. So you can use whatever. It's still the same price points, right? This down move is still going to be the same down move regardless of whether you're on auto or log, right? There you go. It's the same thing. Same thing. Should I use EMA or MA? If you're talking about the reaccumulation section thing, it's the simple moving average. What's good, man? What's up, Kristjan? Good to see you, man. Good to see you. What's 35 degrees in your neighborhood? Greetings from South, from SW, Florida. What's 35? Yeah, it's pretty cold. It's getting nice and cold, bro. Anton's main language is facts. Yeah, you're funny. Let's do an all-nighter. Yeah, bro. Like, that's the thing. A lot of people don't realize that when I show up, I can literally go for 30 hours on this exact trade and really break it down. There is so much that goes into it. It's insane. If any of you have seen my one-on-ones with people, I just want to keep going. I can't stop. Like, well, an hour will pass. I'll be like an hour and 30. I'm like, okay, we got to cut it up. I'm sorry, I gotta go, right? Because like there is so many things you need to understand from a contextual element, even though still to this day, the only system that we actually trade here is this. That's it. This is the entire system. That's it. You're good. You don't even need my payment anymore. You don't need to pay me, right? If you want depth, stay. You're going to get a ton of depth into understanding how to view this, perspective, context, higher time frame, lower time frame, confirms, how to approach this, refinement, MBs, refinement of MBs, etc., etc., etc. But that's all you need. You have it all. That's it. That's my whole system. The whole system, right? But there's so much refinement to it. There's so many nuanced points to it that it's really hard to just be like, here's your one answer that you're looking for, man. We're doing 2.5 hours for sure. Maybe. We'll see what happens. I created a new system, MBCS, and so far the backtest is great. I'll share it when I finish the backtest. Yeah, that sounds like one of the backtests I did to showcase the system, right? I was like, here you can follow the double MB and then CS an entry, right? That's fine. It's a good example too. Hi, I'm trading on T4 with ACAP and do my analysis and trading view. Sometimes there are differences in price. Yeah, get used to it. For example, in one broker, I might see a wick. What broker should I use? Whatever you want, whatever is closest. When the price reaches more partials, do you still not change the SL anywhere? Do you leave it at BE? Yep, I leave it at BE. I don't trail my SL. I have multiple webinars where I talk about why, but to put it simply, because I'm used to the fact that price can easily do this. And with that knowledge, right, where this is just an absorption, many people are stopped out here because, again, the harder you try to, like, imagine you're taking this trade, right? Let's go back to it. So here you are. You're in the trade that I took here. Fantastic. Good for you, right? Let's actually follow this. Breaks down, right? You're already partialed or moved your stop loss to here. That's it. You're out of the trade. That's all it took. Because you don't know what is the actual lower high or the actual structure point that you can move to, right? At every point, you're going to be like, oh, I would have, of course, moved it here. And then, of course, I would have moved it here and here and here, right? All clean. But that's not the case. Because if you're actually following price, this would have been the first point you moved to. And then you would have been taken out. So I don't play the trail game. I play the RR game. And I have my personal RRs behind that, right? Yep. So that's all you need to know there. I wanted to buy TradingView, but they won't let me. Can't backtest. Unlucky. I'm 10 minutes late. Do I have to pay any penalty fees? Yep. Send 15K to me. Call you a scammer. True. And then you say Forex is a scam. Exactly, dude. Here comes a change in the voice. Yeah, that's when you know I've gone crazy, bro. Ment EU's in a weekly supply, though. Okay, so there's been like 6 or 7 MBs on the weekly to the downside. The daily's breaking up. The weekly doesn't have a refined zone that it actually wants to trade from. The weekly was already mitigated at this point originally here. It should have stayed technically below it and kept moving. It didn't. This is clear either potential absorption now, and we might play around here on a few time frames, which is why, again, I tell you guys that I'd be in a mindset of only refined entries off refined zones and nothing else. No following to one direction, because no direction is put in yet. I would not be bullish or bearish on this. Overall, I'm bullish, and I expect over the next few months for this to accumulate, whether it go into bearish MBs, then accumulate and make bullish, or make a double bullish MB, then break down, maybe break up, break down, and then give you a new setup to go. But I'm in the context right now of we're undergoing accumulation, and we're going to be going back and forth for a while. So, great. Again, Hosey, this is a great example of, oh, but the weekly is bearish, therefore I have to be bearish. It's like, Context, 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 context behind what is happening, behind what you've studied, behind the experience over and over. Don't think that one thing determines everything, right? This is the same thing of, oh, it made a double MB, therefore it must be true. We're going in that direction, guaranteed. It's like, yikes. Not how the market works, not how the market moves. Need to be aware of context. Very clean, less chop. Yep. Beautiful, beautiful delivery. And I'm going to be following this week because guess what? Can anyone guess what I'm looking for on this? Let's see. What am I still going to look for on this since there's no invalidation yet? Who knows? Shorts, bearish. Yup. Nothing more. A clean market that is showing me clean delivery, that is holding that clean delivery, that continues to mitigate and hold that clean delivery. No reason I'm not going to focus on shorting this week to keep on taking new lows. And that's it. Over and over again. And then if it switches bullish, does anyone know what I'm going to do? Am I going to start following it bullish? Oh, fuck, bullish. Or am I going to anticipate absorption and wait for bearish displacement? That is clear to me. Wait for displacement down, wait for bearish, wait, more bearish moves. And that's it. And that's going to be my whole week. That's it. But again, to get to the level where you can just look at something and understand what you're looking for and being patient to look for it is a very, very, what do you call it? It's actually a very hard skill set, even though it's easy as fuck, right? I'm doing nothing. Here's what I'm doing on EG this week. Ready? I'm looking for this move. Or I'm looking for this move. That's it. That's all I'm doing all week on EG this upcoming week. That's it. Nothing more. But guess what? Even with that knowledge, people will go and lose a ton of money on doing it because they're like, oh, it's fucking shifting, guys. It's shifting again. Oh my God. You know, and they just go insane. They go insane again. Let me go back up here since I wanted to go down for a second. Using a weekly supply. Yeah. So what? And a double MB was made. And guess what? EG might make a double MB this week. Oh no! Oh, it's bearish again. What do you know? Like, it's not about the one time frame that it's in. We have access to all these time frames because we're literally viewing orders, and using that, we can anticipate the best and clearest move for us. Now, again, if you're someone that is less you're less worried about that side and you're just more like, I'm going to trade any of these zones, then fine. That's fine. I used to do that as well, and I was profitable doing that. But over time, the more I spent time in these markets, the more experience I had, the more time I spent testing, data collecting, guess what? I do a lot less and make a lot more because I now get into some of the best moves I've ever gotten into. My last 6 months of trading, last 3 to 6 months, have been so insanely fucking different from my first year or 2 years of operating publicly in this space. It's insane. If anyone that's actually been through the course, you've all seen it. I've went from taking like 6 to 10 trades a week to taking less than 1 potentially a week, and I've outgrown the numbers I used to return insanely for myself. It's been a crazy experience, and it just keeps getting more and more refined. It's so crazy. And the more I wait, the more patient I am for a clear context and a good S&D, a good refinement and a clear refinement, and price gets there. Holy shit. I literally feel unstoppable, you know, but I don't let it get to my head, but I can see the improvement. It's an insane improvement. Just like a lot of you that have spent, 3 to 6 months here are definitely, and I can guarantee this, okay? I can guarantee this, guys. If you spent 3 to 6 months here and been through the course, I know, that you've undergone serious improvement in your own trading and in your own analysis and your own understanding, whether it be just technical or psychological. I know you've been affected in one of those two ways in a way that you would have never in your fucking life thought about prior. And I know that's the case because I've seen it time and time again, nonstop. I've never in my life had someone leave a negative review on mentfx that has spent 3 to 6 months here. It's actually insane, or more, like 6 months plus. It's insane. Which is telling you something, right? Follow in the footsteps of that which works, right? Why go down this path of, oh shit, I'm brand new and I just want to test the concepts. So do you think this is right? And is it bearish now? And I'm there like, oh fuck, here we go. Okay, right? And then again, it's the same thing over and over again. follow in the footsteps of exactly what is successful. We follow in the footsteps of smart money. We follow in the footsteps of the composite operator because we know it works. Follow in the footsteps of the stuff that people have shown works for them and has made them money or has made them profitable or has made them funded. And again, past results don't imply anything future, but you know what I'm saying, all right? Did you reach the level where you know so much that you don't know what you're looking at anymore? No, not at all. I've just reached a level where I know so much and understand so much that when I look at a market like this, I'm just going to say I'm staying away from it because I can see all the opportunities available here, but I also know how much less likely they are due to my personal experience. So instead of trying to trade this area here or trying to trade any of this, I'm just going to step out and wait for what I know is extremely clear. So the more knowledge I had, it's not that it gets confusing. The more knowledge I have, the more I just stray away from dog shit setups or dog shit markets, right? Whereas everyone else is like, oh yes, EU is my baby. I need to trade EU. Oh, gold is my baby. I need to trade gold. Oh, and they show up every day, gold, EU. And they're just losing money because at some points, based on the market, based on the system you're trading, the market conditions might not be in perfect effect for the best type of trades in that market, right? My setup is based on being almost able to enter anywhere in the market, and then once entered, to manage into big runs. So what does that mean about context? That means the best trades for me are going to be where the market may make huge potential runs due to the current setup. Is this a market where if I long here, it's going to potentially make a huge move? In my mind, nope. Why? If we want to ask the why, multiple MBs to the top side, over 5 MBs, only one daily shift to the top side, MB1, no clear structure or setup there, weekly being absorbed. I expect this to just go sideways for the next few weeks. So in that scenario, if I'm applying my system, which does phenomenal in areas that want to run, is this a market condition where even if EU is my baby, is this a condition that I want to trade? No, it's not, right? That's it. So all I have to do is find a market or a condition that is worth trading. And if I can't, what should I do? Should I force the best possible market, or should I just not trade? Chill, not trade. Perfect. Because guess what? Guess what, guys? You can outperform most traders just by knowing when not to touch the markets. You add one thing like, I'm not trading an hour before news. The second you add that to your rule set, red news. The second you add that to your rule set, you've now added to the bottom line against every other trader that doesn't do that. Done. One thing you have to do. Number 2, I'm only going to trade off the MB1, MB2, or an MB cluster that is in reference to a higher time frame trend that's been established. What have you just done? You're now outperforming again most traders instantly because you're aware of the context of a market that you're going to trade in, right? Small things can completely and drastically change the bottom line. And a small area where you learn to not trade or walk away, you learn to add to your bottom line. That's all. That's all you have to do. And most people don't want to do it. Most people don't, because most people think they need the trade. Most people need to pay off that debt. Most people need the money so they can survive. Most people need to get that money so they can finally quit their job. Most people need the money so they can afford XYZ. And the second you start thinking that way, well, guess what? You're no longer operating under expected value and math. You're now operating under this need for a win, which guess what? That is called the gambler's fallacy, where because you're trading, you think you're now going to win, or because you're losing, you think you're now going to win. And guess what happens? It all goes to zero. And now you're fucking broke. And now you're angry and upset. And now you realize trading isn't for you and all the other fun stuff that comes with it. And trading just never will work for you. And all your zones fail and all your structures don't hold. And life is a nightmare and everything sucks. Yeah. Save your money. Learn to trade. Learn to operate under a consistent rule-based set of principles. Execute those rule-based set of principles, make money doing it, make enough to survive and quit your job, keep doing it, begin to refine over time as you need to, and grow that wealth over time. That is all you ever need to do as a trader. Most people will never do that, ever. They don't want to. So, like, do you freeze or something? What do you do if that happens? I don't freeze. If I go to Bitcoin and look at it, I say, nope, I've been in conditions like this. I've tested conditions like this. I will never trade a market like this because I'm aware that it's not a condition under which a running system like mine is going to operate pretty well in. That's it. There's no freezing there. There's a clear understanding behind the kind of market I will or will not trade. EU. Yeah, I could trade this. Should I? No, I'm more uncertain about where it wants to go. And I'm certain it's accumulating, but I know it's probably going to break down a few times. This is probably going to do this all week. Remember this. It's probably going to go back and forth all week, guys, on EU. I'm just saying. EG, on the other hand, extremely clear, extremely clean, moving cleanly. I expect it to either A, continue, and I'm going to catch that down, or start breaking up, and I'll wait, and then it'll start breaking down, and I'll start following that down. That's it. That's it. Right? There is no freezing there because I know exactly what I'm looking for at all times. I don't need to freeze. I don't need to be like, okay, this market is complicated, but since I am a spy, you know, I'm a crack addict. I am going to crack the code of this unbelievable market that cannot be cracked. I'm going to figure it out. I am the Da Vinci Code solver. I'm the investigator. This is how most people think. They're like, this market, nothing is too hard for me. Here I go. Lose, lose, lose. Ment. Why is this market doing this? Why? And I'm like, come on, dude. Watch a webinar. Watch any recent webinar. I keep telling you to trade markets that you've tested and understand clear moves behind. Test, you know, like webinar 59, or right, I think it's 59. What did I talk about? Going back, finding specific moves that work perfectly, understanding how those moves delivered across time frames, following them. That's it. And only following those until you fully understand them, and then you can exploit that. You can branch out. You can add a little bit of fluff, like, okay, now I know how I can potentially trade the MB instead of just the refined S&D. Oh, now I know how I can continue to trade in the same direction of the trend without needing price to come back to the S&D. And now, from starting at a very simple, this is the one thing that I know works, and then extrapolating it down, you now add into the arsenal of the kind of trades you're able to take. And then as you do that, you start recognizing the clean kind of moves that work under your setup. And now you don't freeze when you see a bad market. You look at it and you say, this ain't worth trading, right? Last week, again, in webinar 76, and this is all available to you, the one thing I said about the XXXUSD pairs is I said the only one I like is GU. You guys remember this? I said, because of the clean MB cluster here, and only one other break up, I am happy to follow this zone, but because the zone is so large, I'm going to refine it. I'm happy to take a buy here. That's the one thing I sent out. Let me show you. Because again, a lot of people are like, hindsight, you're a fucking hindsighter. Let's see. Did mentfx talk about this GU? Did he draw it out? And if he did, where is it? Hey guys, what do you see? What do you guys see here? The only thing I sent out, here's the zone mitigation. Here's the MB cluster. Here's the only other zone, because why? MB breakdown, MB1, MB2, MB cluster, and I expect what from experience? That this is going to explode if it wants to. This is the only market I saw in this clean condition. And I refined the zone for you, and I said that's where I'd be buying if it came back. I'm going to just leave it there. Just listen to Papa Mint. Yeah, for real, boys. Okay, listen, guys. I'm going to run away for 1 second and get some water so I don't die. Just go off on retail for a second and tell people to watch the course. BRB. Okay. I have water right here. My bad. Phenomenal. Let's get back into it. All right. So, yeah, down 19 days. Well, a month and 19 days. Can we go over your 17.5 on your GP once the time comes? Yeah, that's exactly what I'm talking about today. We're going to do a interactive breakdown of that. I'm going to ask you guys questions as we do it, just to make sure that everyone understands what I'm looking at, because again, it's always been the same thing. There's always a specific way that I look at the markets, and then from there, there's a little bit of nuance. I'm going to talk about that nuance today, but that's all it is, and we're going to do it together in a second. Understanding how a trade works is like playing a puzzle. You need to go into the piece by piece, keep placing, and soon enough you'll see the whole picture. Yeah. So fucking crazy. Yeah, for real, dude. I should be completely finished before this year ends. It's going to be a good Christmas gift. It's going to be a good New Year's for you coming into next year, dude. Next year is yours. A lot of you, next year is going to be yours. You got just enough time right now to start finishing a lot of the stuff and foundation taught here. And then coming into the new year, you will have a lot at your disposal to really set off your, you know, careers in this market, in this industry. Snow took that personal. I feel him. Well, no, Snow just listened. And he listened, and now he's one of the top G's here in the group. He's doing great now. And that's exactly what happens. I appreciate the monthly fee. Please don't change it. I'm not changing it. But my point is, what I would do if I wasn't doing what I do now is I'd be charging $15K for a one-time fee. Right? Because that's how I think, that's what I think will make it worth it for people to actually watch everything as I expect them to. And, you know, it'll weed out this idea of, oh, but 1 month isn't enough, mentfx. I'm like, well, I don't charge a monthly fee because I expect you to be here for 1 month. Like, there's this thing called a trial, and it's basically a very cheap trial in my mind. You have a month to decide if this is something worth pursuing or not. You have a month to decide and watch all the course content if you really want to, and decide if that is something that you want to pursue, and then you can decide for yourself if it's worthwhile, right? Because for many people, it's not, and I don't want to take someone's $15,000 for them just to be like, you know what? Trading isn't for me, and I'd feel bad for that. So instead, I offer it the way I do, and that's just my personal way of approaching this. So, thank you, Kristjan. I appreciate you. What up, Tate? The whole course? Yes, sir. The whole course. This webinar is my 1-year anniversary with mentfx. Hey, Echo, my man. Good to have you here. My life completely changed. It does not matter whether I am trading or still learning. It just clicks within 8 to 10 months at least. Once the process that decides to choose to go over the process over a quick fix can truly feel what Anton is saying. Thank you for this, man. I got you, dude. I'm glad you've been here for a while, and I'm glad that you're having the clicks that you deserve to have for spending the time, for actually putting the time in. I got you, man. Hi, I made this weekly Bitcoin chart after I watched webinar 14. I want to know if I got it right. What did I just talk about? Yeah, maybe. Playing League with this in the background and Anton popping off has me on the dirtiest killing streak. Watch the last webinar. He talks about a lot of MBs will be happening like it did from the past. Yep. It's all there. All before the hindsight. If you guys have been on my YouTube videos, it's actually so cute. You'll get the occasional person who's like, oh, this hindsight trader always releasing stuff after hindsight. Oh, of course it's been bearish because it's hindsight. And I'm like, oh, buddy, you don't even know. I predicted each one of these moves for you if you've been in the private. It's all there, and like it's so cute. I love it, dude. I fucking love it. People don't take the education out of it. They just want to find something to like cry about. It's so cute. I love it. I live for it. I live for the idiots, man. Hey man, what do you think of USD CAD? Do you think that this is likely to absorb the double lows into a weekly MB and then continue to clear the 1.4 highs? Maybe. Anton, can you please look at US 100? This stupid market confused. Again, watch webinar 76. What'd I say? Not a clear market to me. Don't really want to follow it. The only thing I said is you have this refined zone that you could use if you really wanted to, but I wouldn't. That's all I said. And guess what? It's a market of back and forth. Guess what all of last week was? Back and forth. Back and forth. Again, the same thing. You need to pick your battles. Right? What is US 100 doing? It was bearish. It was very bearish. It delivered beautifully to the bearish. Now, it's in a weekly high to low bearish. So right now, it could do this, or it could do this, or it could do this. Okay? And then on the daily, what happened? It was a very bearish market, then shifted bullish, shifted bearish. So what are we undergoing? Most likely accumulation, double MB bullish. So at the moment, the only thing I do is I confirm a refined area of the double bullish MB to go long. If it doesn't do that, all this is useless to me. It's fluff. I wouldn't touch it. And guess what you're doing? I love my US 100. I must catch my trade. I don't care how wiki and dog shit it looks. I need my trade. And what happens? The market confuses the fuck out of me. That's what happens. You need to get used to trading markets that are in line with what the best delivery for your confirm looks like, right? I spoke about this last week. I literally did an analysis and said I would only confirm it here. Otherwise, I would not touch it. This is an ugly market that's probably going to go sideways for this week and next week. And guess what? That's all it did. Non-stop sideways. 4 hour breaking down, maybe absorbing. 1 hour breaking down, MB there, absorbing, breaking up, breaking down. Guess what? I just outperformed 95% of traders by not trading a shit market. That's all I did. I said, nope. I'm going to go look at something that's clean. Done. So now not only did I outperform the 95% trading US 100, I outperformed 100% of them, or more if it was even possible, by looking at an even better market that fit my criteria. And if it didn't, I would have just not done anything. And again, I'm outperforming most people by doing nothing. And guess what? Sometimes it won't be this case and it'll just go. But guess what? What's beautiful about what we do? It repeats non-stop over and over again. And there will always be setups. Always. And the people that don't understand that are the exact same people that are going to force things in markets like these. That's it. Over and over. And again, for anyone here that's like, oh, Ment, fucking do the EG breakdown already. This is all part of it. Everything I'm teaching right now in regards to looking for clean markets, for clean zones, for clean movement, MB clusters, all this stuff, this is all going to go into it. Because when I jump into EG, we're going to talk about how this is a completely different scenario than every market we've currently just looked at. So even though you might feel like I'm not teaching you the main thing right now, pay attention. Because anything I say, I usually say for a purpose and a reason. And I think it's very important for you to understand. So just keep that in mind. So when I say something like, not clean, didn't want to follow it. Not clean, didn't want to follow it. There's a reason for that. Okay, there's a reason. A reason. Let's have some more water while I read some of these questions. Insane refinement on your behalf. Thank you. But again, I did nothing more than what I teach in section 2, subsection 6. That's all I did here. That kind of refinement. Nothing more. Again, all the concepts have always been the same. There's just a question to how you approach them, right? Very important. Let me know when it's outlook time. Always at the end. Outlook is always at the end. So if you don't care about any of this, you can just, you can jump off and come back when it's uploaded and just watch the end. The difference between webinar 9 and 70 is insane. Yep. I had insane growth personally. Again, it's always been the same thing. The concepts are all still there. They're still the same application. There's still the same approach of understanding where you are big time to continue that move, right? Where you are in a smaller to continue that move, where you are in a smaller to continue that. All of this is still there, but the way that I've come to, add rules, refinement into what I do, stay out of markets that aren't clear to me, et cetera, have completely, have basically undergone such a big shift that they look like two different mentors, right? What city were you born in, Mr. Ment FX? I was born in San Jose, in California. 6 months, and I'm till now surprised how I improved compared to my friend who's stuck in the gambling mentality. I was the same. Yeah, that's how it goes, man. Literally, you will outdo anyone around you in your circles, whoever you speak to that might be on this path as well. You will outdo every single one of them if you hit the 6, 8, 9 month marks here, basically. The art of becoming profitable in trading is knowing when to stay out. Yep, a lot of people don't believe that. People are always after the setup that's going to make them millions, and they're just constantly looking for that setup without realizing part of that setup is knowing the conditions that make that setup good, right? It's like, it's insane. If everyone tried to catch a V, like a V reversal, let's go really basic retail. If everyone tried to catch a V reversal every time they thought it's happening, they're going to lose tons. But the second you add a little bit of context to it, like let's say, here's a 10 moving average, and when this moves away over 100% from the 10 moving average, and at the same time has a release of XYZ, it's a market that technically should be more worth, whatever it is. The second you add even one thing like this, and add a context to when you should trade this V reversal, you've just added to the bottom line insanely. And when people are all trading these V reversals here, they're all losing money. And you trade this one, you make money, right? Small things and understanding when or what conditions are ripe for your setup will completely and utterly change the bottom line and your profitability. Because guess what? If I followed all my rules the same way, and didn't look at EG and kept just looking at EU because it's my baby. It's my baby, guys. And just kept following it, I probably would have just taken either a few -1s this week or a few break-evens. Or maybe no trades at all. And that would have been it. That would have been my whole week. But because I understand that I can go away and not get attached to a pair, because so many people get attached. It's so weird. People literally make like these pairs their babies and they're like, that's it. Like even I kind of used to do that. So, you know, I shouldn't be talking, but I now don't do that. So now I can shit on people that do. But you can't get attached to this stuff. You need to get attached. Here's what you need to get attached to, okay? You need to get attached to the context of a market that gives you optimal setups. And when the market is no longer in that route, you need to look for that attachment again anywhere else. And if you don't see it, you need to stay out. If you develop that attachment over the attachment to a given pair or a name of a pair, you are going to do so many wonders for yourself, right? I'm wondering if Forex is better for trading than stocks. It depends on what you're doing. I wouldn't apply this like way of trading that I personally do to stocks. They're not as liquid. They move more in very trending environments into one side. However, these moves still happen and they still can give you great entries, but I would apply a different, more trend following based approach to that. Not the one we kind of use here, but more of the one I teach in the stock reaccumulation setup. So I would stick to FX. FX is like, I love FX. This is where I belong. Typically, when you have more knowledge, it just makes you understand when to stay out. Yep. It's not confusion. It's just knowing liquidity can be ran in both directions for too many reasons. Nothing clear. Yep. That's a very good way to put it. It's not that I'm confused here. I think this price can do this or this or this all week. I don't care. All I know about this market is based on experience. It's most likely to do any of these. Therefore, without a likelihood of one of these, it's going to be hard to follow on a lower. Therefore, if I did, I am expecting to take more losses, more break-evens, and being wrong more of the time. So instead of doing that, I can either, one, look to something else completely and be more correct on those and get much better moves, or I can keep trying to follow this and take those losses as I need to, right? That's just all you have to ask yourselves. And for me, none of this is worth it. This is ugly. This is not a market I want to trade right now. Very simple. It's like a lion waiting for the gazelle to drink water, then attack. Operating under pressure is bad. Yeah, always. Always. People don't get that. People always like text me on Instagram. They're like, oh, I have debt. I owe this much money. I need to get my family out of poverty. I blah, 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 blah. I need to afford this. I need to pay this. Can your mentorship help me? And I'm like, oof. This is not the... I basically answer and say, this is not going to be the industry for you if this is the environment you're coming into it from. Because as hard as your life might be right now, you are only going to dig a deeper hole, be more in debt, lose more money if, you know, you're after it because you need to pay off XYZ. You know, I don't bullshit myself. I'm very privileged for the life I kind of grew up in and the background I had and the money my father had and my parents and the success of them and that they stayed together, all this stuff. I'm very privileged in that sense, and I got to focus on this early on, and I got to perfect my craft very early on, and I had the freedom, the pleasure of being able to, you know, make my own mistakes and just keep studying through it. Not everyone gets that. So, you know, conditions can be different. But if you're, regardless of the condition you're in, if you're in the environment of, I need this money to survive, you will never, with almost a 99.999% guarantee, be in this market long-term or make money. That's something that you just need to realize. So you need to either just commit to that time process and do something else on the side, or you need to find something else completely. You need to leave the industry, right? It's a very important thing that people need to realize about themselves. We all come from different backgrounds, so, you know, I can't just be here and be like, oh, find time. Oh, fuck you, find time. Like, I hate it when, like, these self-help gurus and shit do that kind of stuff because it's not always possible. But you also need to be aware of the kind of time you need to put in to learn a skill that's literally teaching you to, you know, make multi-millions of dollars if you wanted to on your own. People get dopamine when they identify themselves as, I trade every day, and that's why 90% fucking lose. Yeah. People are like, yeah, you know, again, on the reel, the Instagram reel, look at the setup. Oh, I'm on. Boom, analyze. Ooh, boom, trade. Ooh, change a character. Boom, entry. Boom, 9 p.m., 9 a.m., boom, entry. Like, without this idea that, nope, just, you need to learn to sit back. I show up to analyze. I never show up to trade. If I trade, that's like luck. It's like, wow, whoa, I got to trade. That's crazy. Most of the time, I'm just showing up to draw, right? Like, the way you need to think about it is, this is you Okay, here we go. It's art time, guys. Here's you, okay? You show up every day to your little studio. You have an art studio, okay? So here's your art studio. You walk in the door. Boom. I walk in. This is your art studio. Okay? Notice how there's no one here. There's no eyes on you. Okay? No eyes on you. You come in. Here's your little thing. Here's your little paints and colors. Here's your little brush, right? Brush. Here's your little stool so you can sit. And all you're doing every day is you're just showing up and you're just painting. You're just painting a little image and you go and put it on the floor, and tomorrow you repeat the same thing and you keep painting images and nothing ever happens. But one day, some art connoisseur walks into this door randomly, sees a painting and loves it and goes, I'm going to give you $20 million for this. And that's when you make money. You need to be the painter that's showing up to paint, not for the purpose of getting the money for the sale, but just to paint. That is analysis. All I'm doing is I'm painting on the charts every day. And then one day, well, usually most of the time, one session, you're going to get the setup that's going to meet everything and you're going to take it. And that's when you get rewarded for it. But if you're not showing up just to do the painting, to the draw your analysis and wait, you're never going to get to the point where someone walks in and gives you the money for it. You understand that? So that's what you need to realize for yourself. You're not here to just paint and hopefully get a sale. Because if you were, you would never produce any good art. You would never produce any good context. You would never produce any good analysis. But when your analysis is good, and over time it finally begins to play out, and then you get in on it, you are going to be rewarded. That art connoisseur is going to walk through that door, and he's going to pay a ton of money for your painting. Here's a signature. As you said, you can have a sniper pointed at your head, and you will still execute the same. Yep, it will be no difference. You know, put a gun to my head, and someone will tell me, oh, get a trade. I'll be like, EU's not in a good trade right now, man. You can pull the trigger if you want, but there's nothing to do here. And they'll be like, okay. But I'll be like, yo, but EG, check that bad boy out. And they'll be like, what? What's on there? And I'm like, boom. And they're like, damn. Trade less to make more. Always. But I'm different. Yeah, people love that. People love that line. But I'm different, bro. I come from a different cloth. I'm unique. I have a different work ethic, bro. You gotta believe me. I've been through the shit. These people, they haven't been through the shit. I've been through the shit. You know? Nope. Yeah. Just because we know how to read markets very well doesn't mean we need to force anything just because we know the concepts. Yep. Because again, people don't realize that painting doesn't mean it being sold, right? This artist here, you, just made 1,000 paintings that technically should all be worth 20 mil, but not a single one of them sold and will never be sold. That is what analysis that doesn't play out looks like. It's a good analysis. You had nothing wrong with it, but not all of the context or the SSC was there. So there was no reason to take that trade, and therefore you never got to sell it, and therefore you never got a trade. You just need to go and show up again and do the same thing, because you realize that good analysis does not mean good trades. Okay? Good analysis only means good context for potential trades. Okay? That's all it means. Good paintings does not mean selling every single one for 20 mil. Good paintings means the potential one day for one of these to be sold for 20 mil. Okay? Retails are shorting. I don't know. I don't care what they're doing. Retail is always doing some dumb shit. I'm just following my context and my rules, and I'm waiting for good markets with clear movement, with clear defined direction, with clear S&Ds and S&D refinements. That's all I'm doing. With clear MB or MB2, or double MB, or clear MB clusters, and the clearest potential confidence in the continuation. That's all I do. Those are the main things I've ever done. And I also scream at you guys every Sunday. I'm dead, bro. Ah, shit. I'm new here, but the Zoom call is golden. I got you, Darren. Welcome. Welcome to the first webinar you're here for, bro. I'm glad to have you here. Nice. Yeah, I'm glad Twitter's back to free speech mode. Thank God. Some scary shit going on there, bro. Love to see it. Yo, guys, we don't use that name here. I can't use the banned names, you know, in case I do end up making like shorts or something for YouTube. Looking good. Treat it like a cheap college course. No, this is 7,000 billion times better than a college course. Okay, don't actually hold me to that. I'm sorry I said that, because again, college will teach you to do what most people want to do, which is be led rather than lead. So therefore, college is better because most people prefer to lead. I mean, to be led rather than to lead. So if you are someone that wants to actually lead though and take advantage of yourself, then treat this like 7,000 billion times better than any college course you're going to be in. Can you stream League? Maybe. This is my first month. I used to trade off nonsense. Now I run my own communities in the 4-hour FNB setup and been killing it. All right, well, good for you. Dear Papa Man, I just want to say thank you. I only 1 month and 10 days in your mentorship. Hey, good shit. Keep going, man. There's a time to go long, a time to go short, and a time to go fishing. That's funny. Yeah, people need to learn to walk away. People need to learn when it's not time to trade. Got a weekly meme here. Let's check it out. What color is your S&D? US 100 is the same as SPY and Q. Yeah, they're all pretty much the same. Will we do some more outlooks like normal? Yeah, of course. But what I am also going to do, just so a lot of you know, is now for outlooks, instead of trying to force analysis for you guys where I'm like, it could do this, it could do that. Instead, if I don't see something clear, I'm just going to say I'm not trading this or I'm not analyzing this. I'm going to make it really clear cut now so you can see exactly how I think. If like now, if someone asks me about EU, all I'm going to say is waiting for accumulation, not touching it. And that's going to be it. That's going to be your outlook. Because, you know, if you're at this webinar, you should be at a point where you start understanding how important context is to trading. And honestly, sitting here and trying to guess the back and forth, like, yeah, this could go long. Yeah, it could go short. It doesn't really matter. Yeah, you got to confirm it this way or this way. The context is not there. So now, from now on, I'm just going to be like, no, I'm not, like, this is dog shit, not watching it. And when I see something clear like this, I'll say I'm watching for shorts and I'm going to follow it short and I'll show you from where. GJ, very short, very beautiful. I will look to follow it short this week, right? That's what I'm going to start doing for outlooks. I'm going to start focusing on only the good setups because at this point, I want people to move away from this version of I'm going to trade, you know, the indecisive pairs and decisive pairs instead of just focusing on the stuff that is the cleanest, the best, you know, and the most clear cut. So that's what I'm going to try and do. Hopefully you guys enjoy that. I don't know. Maybe let me know what you think about that, but I think it's going to help a lot. FX replay works pretty well. It moves the candle if it's real markets, but I don't use it personally because my entry is on 30. Yeah, you can use it. I don't know. There's tons of backtesting tools out there. Tons of them. Just do your own research, find something that works for you, and use it if you want to. In which webinar can I know about MB clusters? A number of them. I just watch them all. Do you think in evolving your strategy to get only high RR but higher win rate? Nope. No such thing. I have no reason to up my win rate. It's like the dumbest thing you can do. If you have a profitable system, focusing on upping your win rate just makes no sense. If you want to, you can, but I'm here to make money. I'm not here to show off my win rate numbers so I can feel good. Catch this YB later. See you, man. See you. I have seen all the webinars in regards to the clear data sheet. I want to start backtesting. Maybe I'm stupid, but I'm still not sure how to fill out the normal journal task. I'll make another video on it. We have a new, there's like a, I'm adding a, me and Clarith added a little bit of an update to the journal. So there's going to be even more and better data collection, like analysis for you. And I'll talk about that probably in the next week because I won't have time today. I still want to break down EG for a number of you. I find it difficult to see and draw zones. Zones always in the same. For example, with backtesting without replay, you can make yourself crazy with it and draw them everywhere. Yep, you got to learn. You got to experience it. You got to do it over and over again. You got to see what I do every single week. You got to watch my outlooks. You got to watch my trade breakdowns, why I follow certain zones, why I don't follow zones, when I start, when I don't look at them, when I refine them. like GU. Why did I refine this and not use the big MB? Well, because this was a huge zone in relation to the zone, and if you try to confirm this multiple times, you would have taken losses, 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 losses. But instead, I sent out this with the refinement, and guess what? It came in, and you had one con from here, and it went. That's it. So again, experience. And there's not much else to it. I can't just sit here and be like, oh yeah, no problem. Here's the one thing you should do, and now you're a professional. Again, if you want to try and skip some of that content, you can always sign up for a one-on-one, which costs an absurd amount of money in my mind, but you can sign up for it, and we can go over some context, some nuances, some examples. But I don't think it's worth it. I think you're much better off spending your money by spending time here and going through everything and working on it, because that's the only way you develop yourself into someone that understands what you're looking for, right? Anton, at what point did you know that you were onto something different in trading? What was the thought you had that made you realize that all these gurus and retail BSers don't necessarily have it wrong, but they're just not on the same level? They're just stupid. I don't know. There wasn't one thing. There's never one thing. Just time. A lot of time and experience and seeing what works and what doesn't, and just recognizing, you know, psychologically where these people are in their lives and where I am, and how stupid a lot of these people are. It just is what it is. So I just moved away from it. Starting at 2 mil. There you go. Anton, the last 10 months, have you ever had a red month? I think so. Maybe like a more break even or a few -1s, but not really. The thing is, when you're executing on a much lower time frame based setup, you can have red weeks. I've had red weeks, but it's kind of hard to have red months. I think I had one or two red months, maybe one. I think only one. The rest were, I mean, or like break even. Everything else was fine. Like positives, mildly break even. That's it. That just happens though. If you're on a higher time frame system, you're gonna have more red months, which is fine. It's normal, right? But you'll usually never have a red year, to put it simply. But, you know, even then, sometimes, based on normal probability, it can happen. I fucking love this story. Yeah, bro. The slower you take it, the faster you will get there. Yes, sir. Stick to your rules. That's what's up. Main patience is the key, because it happened to me a couple days back. It took 8 losses in a row and then had 2 trades which ran more than 130, and I closed them early, so 1 to 4 and 130, and I was so pissed. Yeah, I mean, that's just basic math system that you need to start following. Before going through the course, my favorite part of the webinar was the outlook, because I still had a signal mindset, and when I started taking them seriously, now I love trade breakdown psychology, because I trade almost the same system as Ment. So seeing his understanding behind why he did something reinforces my confidence. That's what you're working for. The earlier guy that said something about the zones, this is what you want to work on. Right here. Exactly what this guy did. And I remember you, Joshua, because I've seen your name a lot of times over the last few months. So yeah, this is really good. Was the same, but because I know I'm becoming the trader I want to become, all because I'm doing everything. My mentor instructs me to go through the course. There you go. What's the main points today? A lot of things, but we're going to be breaking down a trade soon. Bro, same literally. I opened 2 trades on a short. Yeah, looking good. We'll talk about that later. No need for this. We're going to jump into the main stuff. Yeah, college is forced. This course was purchased only by initiative. I mean, college isn't always forced. A lot of the stuff you're taught in college is forced. It's really stupid, for sure. But yeah, many people that are here are, you know, they chose to come here. So that puts them already, again, ahead of a lot of people. It's crazy. All right, we're going to drop through any of these and jump into the main part in a second. You've shredded time off my learning and trading journey. Psychology especially. SMC way is opposite of what society teaches. That's why, and some struggle. Yeah, a lot of people don't even, like, a lot of even SMC is so dog shit. It's crazy. Do you describe ment blocks as the last up move or down move? Is this what, because all of, it's both. What happened to the painter? He became rich because he followed the rules of just showing up to paint and not to sell. It's so ironic how when you try to rush to become profitable, it takes way longer. Oh yeah, 100%. I've seen people that rush to become profitable and take like 6 years. And then I see people that are like, all right, fuck it. I'm going to take as long as it takes. Anton, I'm ready to dedicate 5 years if I need to. Here I go. And then like 2 months later, they're like, all right, I'm in my testing phase. I know what I need to do. This is insane, right? And it's just like, it's crazy. Okay, guys, so everyone, shh. Clear the room. We are going to break down EG and my personal trade from a standpoint of what I teach you guys here, as well as talk a little bit about S&D 2.0s and how you can utilize them in your own trading because they're another way of viewing structure. So there's going to be a little bit of advanced learning there, but I'm going to teach you exactly how and why I took every single zone I showed here, how I sent it out to you guys before it happened, how I confirmed it with the same setup I've taught you over and over and over again. And we're going to look at all of it, and we're going to break it all down. So this is going to be I'm probably going to put this webinar in section 4 once we're done, because it's going to be another great representation of the system that I am teaching you guys, okay? So we're going to look at this last image right here. Of course, a good little image. Very good. All right, and now we can jump into the main part of this webinar that I think is going to be very vital for a number of you. So let's get going. All right. So we're going to start on the daily, and we're going to start all the way back here. All right. We're going to start back here. So, okay, we're going to have to break this down from a standpoint of everything, higher to lower, all the fun stuff, because we want to break it down from the very, very first step. Okay. Now, let's go left to right, as we love to do, okay? How do we always start any analysis? We go left to right, right? That's something that's very simple. So, once again, what do we have? We can just go left to right. You can see where I started looking left to right, but basically you have a breakdown, right? Made a bearish break, low, caused by this high. Made a break up, that's an MB1, whatever. Broke up, right? Held the range, made an MB2, held the range, made an MB3. This is not a holding of the range because the pullback rule that I teach was not met here, right? A candle did not close below a previous candle's low. Therefore, is the rule for a pullback here met or not? Very good. No. So when we have the next displacement, what is the low that I'm still using? Am I using 1 or 2 as my low of the range? 2. Okay, great. So on a higher time frame, on this specific time frame, 2 is the low, right? So we can all admit that this guy right here is the low. That's the protected low of that. Now, if we go to a lower time frame, is there a chance that a certain displacement can have a lower time frame low being here? Yes or no? Yeah, of course, right? That's how fractals work. We're aware of that, right? Because what we're going to be talking about today as well is this understanding where, a lot of people are like, oh, the market's bullish and bearish and it's going all over. But you need to, again, wait for the context to be clear in both ways. So again, the daily's showing clear bullishness. It's made multiple MBs to the top side. What are basically the two things that we could technically look for here? Actually, let me ask you guys this. Does it make sense to potentially look for longs off of this unmitigated S&D, yes or no? Very good. Yes, you guys are correct, right? At this point, what you have is a bullish market that's actually making MB clusters, right? Almost MB clusters, mitigating previous MBs and moving higher. And you could, of course, look for longs here, and you can see how those longs would be playing out potentially, right? And those lower time frames, based on what you're watching the lowers, could be playing nicely as well. And here's a great example where, again, as price breaks down, right, it does so. And by breaking down, what is it doing? I mean, it's failing to hold an S&D and failing to deliver in structure, blah, 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 blah. Things that many people view as a big issue. And everyone's like, oh my God, it didn't make it to my high, right? But again, we need to disconnect from this way of thinking because we don't care about that shit. All we care about is specific back and forth and just looking for the clear moves. Now, let me ask you guys, based on this candle's close, is that a displacement or not of that low? Does that meet my displacement rules? Yes, it does. Very good. So in that case, can I count that as an MB1 to the downside? Yeah, always. Okay, and then in the scenario that this isn't, so before we, actually, yeah, we'll do it here. So now I'm going to ask you guys, we're going to move back and we're going to look for the first time the rule is met. Is the rule met here of a candle closing above a previous candle's high? No. Okay, let's move next. Is the rule met here of a candle proving above a previous candle's high? No, it's still not, because there's no candle closing above a previous candle's high. This is the candle's high. Is the rule here met? Is there a candle closing above the previous candle's high? Nope, it's still a no, guys. This candle has a wick. Okay, next. Here's a high. Is the candle closing above the previous candle's high? Yep, it is. Here's the body closing above a previous candle's high. So for me, personally, that's where the MB was created from. That's how I view that price action. That's that liquidity rule for, that's where my displacement happened before the breakdown. So for me, I'm going to ask you guys very quickly, Is MB1 now put in motion? And where's that MB1? Is it this or is it this? So we're going to go 1 or 2. Which one is the MB? For me, it's 2. So I saw some people say 1, but for me, it's 2. Because the rule was met here, which makes this my protected high and this my new low. That's it. So this, all up here, is useless to me. I'm not looking at that. So again, I'm not looking at this high to this low. I'm looking at this high to this low. That's MB1 for me. That's how I use my personal structure rule on any time frame I'm watching to determine whether or not, or to determine what high or low I want to use. Does everyone understand that? Yes, very good. Okay. So now, based on basic section 4 material, let's go to section 4 material. You know, we've had MB1. Can we start confirming this MB1 to go short? Based on everything I've taught throughout this course. If you're new, don't say anything. If you're been here a while, feel free to answer. Yeah, you guys are right. So it's a yes, completely correct. Because again, we can fully confirm an MB1. It depends on what your confirmations are. Double MB rules are a version of applying context. They are not necessary, right? So in this case, an MB1 can be fully confirmed, which is why, again, you're going to see me confirm this area. Now, I'm going to ask you something. In this scenario now, is this a valid area right here to look for sells at? So I saw someone say no, but the answer is actually yes, it is. Because again, as per section 4, this is why it's so vital you read everything, okay? This is why it's so important. Right here, this line. A zone can be refined to the unmitigated zones within it. A unmitigated zone has its own mitigated and unmitigated zones within it, and a mitigated zone may have unmitigated zones within it, and a MB is always its own unmitigated zone. So just based on that, is this MB a valid potential area to fully confirm if you wanted to? Yes, it is. You're correct. Now, does that mean that we need to keep this and confirm it the second it gets here? Exactly. It does not. And instead, because we're aware of how large this zone currently is, and because we, on a 1 minute, we're going to be taking losses all over. So if we know this, based on basic cause versus effect, what can we do to shrink this zone or to make it smaller or whatever? We can refine it. Very good. Very good. Thank you. So let me ask, is this zone a valid refinement? Yeah, it is. You guys are correct. Exactly. Now, once again, based on the context of this market, based on the high to this low, is this a zone worthy of being confirmed, or should we refine it further? Again, like, these are things that you can ask yourself, because again, remember, if I did all my outlooks like this and I just said, okay, I expect bearishness to tap in and go, I would technically be correct every single time, because the idea behind this is what you're looking for, right? Technically, this is what you're looking for. Now you can refine. And refining allows you to, again, potentially miss the move, but gives you a refined area within which, if it happens, you can get a trade. This is very important because a lot of people think that when they refine and miss their zone, they did something wrong. This is not the case. We refine to allow ourselves to confirm on a potentially much lower time frame. Now I'm going to ask you guys something. If we refine to here, is it okay to use a 4-hour or a 1-hour confirmation? Based on this being a daily. Yeah, it perfectly is, because there's a lot of space there. Now, if we refine, if we keep it here, does it make sense to confirm it with a 5-minute or 1 minute? No, it doesn't, because you're going to take a fuck ton of losses. This is the basic idea behind a size of a zone, or basic idea behind the rule of 30. The zone is too large for the confirmation of a very, very low time frame. So what can I do to further make the zone smaller if I want to? I can refine it, right? I can go even lower and refine it further. Great. Let me ask another question. Is it valid for me just to take this zone and take 50% of it and let that be the refinement? So like that. Yup, it is. Correct. Right? So you're all now seeing a, basic section 1 through 3, or section 2 basically, of refinement. How a 50% of an unmitigated zone can be the unmitigated zone. That's all you have to do. You need to learn to understand refinement. Now, we're going to keep this MB on here. Actually, what I'm going to say is, let's say we refine this zone already, okay? And let's like refine this wick too. Is this a fine area to also confirm? Yeah, it is. Very good. Because it's, again, another refined zone inside of what? The unmitigated portion of a zone. And even if this was mitigated, would it still be valid? Yeah, it would be. Because of the specific rules right here. Again, I don't say anything for the fun of it. Everything I write out has a very, very specific cause to it. Okay? As to why I wrote it. These things need to be understood, because you need to recognize how you can stay out of bad price action. So now, theoretically, based on the size of these zones, can I confirm this one with a 1 minute and this one with a 1 minute? Yeah, I technically can. And all I had to do to confirm these with a 1 minute was take a rather large zone that I couldn't confirm with a 1 minute and create it into this. So what I've basically done is I've turned a 220 pip zone into a 30 pip zone and a 50 pip zone. That's what refinement can do for you. Again, can price come here and go short? Yep. Are we going to cry about it? Very good. We're not going to cry about it. Why are we not going to cry about it? What are we aware of in this market? Because we're men. Because there's infinite setups and there's always going to be another, and this is what context building looks like. You should be missing opportunities. Most of the trades should be missed opportunities. Most markets are missed opportunities that keep running, right? Because what is this right here, guys? Really quick. Here's an MB. What is this? That's a mitigation. Should we have looked for buys here? Would it make sense in this large of a zone right here, basically? No, it wouldn't, but it's still mitigating and then it's moving. Right? So we missed the big move, and we're going to miss most of our big moves, right? Here's the refinement. It never hit it. Here's the MB. It hit the MB perfectly and went. Do we cry about it? No. Most markets are going to move away from you. Most of them. You're going to miss most moves if you're properly trading. Otherwise, if you're trying to catch all these moves, you're just going to be taking losses. That's it. Over and over again. So we have these two refined zones. Now we can talk about how we can refine these. On the one hand, we could do these 50% rules that we just did. On the other hand, what can we do? What do we know is inside an unmitigated or mitigated zone? What do we know is inside of them? Based on the rule I just gave you guys. So there's MBs, technically, sure. There's unmitigated zones and one more kind of zone. Based on the rule I just wrote out. No, and mitigated zones. That's it. So remember, inside of mitigated or unmitigated zones, there are more unmitigated and mitigated zones. That's it. That's all there is inside of there. So if we wanted to refine and we went inside of there, what should we be technically refining to? The mitigated or an unmitigated zone? If we went inside of it, should we be looking for a mitigated or an unmitigated zone for refinement? Unmitigated. Okay, great. And can that unmitigated zone be in the form of an MB? Yes, it can. Or can it be in the form of just a basic S&D that has basically an imbalance below it, aka unmitigated? Yeah, exactly. Very good. So that's everything that should be going through your head every time you guys do an analysis or an outlook or anything for yourself. You should be literally going through this map of questions in your mind and understandings, because one, it's going to help your psychology, but two, it's going to get you thinking about the same thing over and over and over again. That's all that goes through my head, but it just goes through instantaneously now. I'm just used to it, right? So let's go to a lower time frame. Let's see if we can refine this. So we're going to leave this relatively large zone here just to refine a little bit later, because this is all like, looks like it's mitigating this, so we'll just leave that there. So again, just looking at this, what can we refine this to? I'm just going to ask a number of refinement questions here. Can we refine this zone now to this low to this high? Yes or no? So Snow said no. Some people said no. So the answer is actually yes. Why? Because again, what is more than one candle represent, first of all? An MB. And what is the rule behind an MB? based on S&D rules that I just read to you. And MB exactly is its own unmitigated zone. So even though, guys, it looks like it got tapped into, and MB is its own unmitigated zone. What happened here, to give it to you clearly, is price mitigated this S&D. But it did not mitigate the MB because an MB is its own unmitigated zone. So this is a perfectly valid refinement. Okay, this is why all these many things that I teach are so fucking important to recognize, have in your mind. But it's how to pull back, right? I don't know what that means. Don't worry about that. So then my further question would be, can we refine to this candle, just this candle? Yes, we can. And why? Because it's unmitigated. Now we can clearly see that. A one candle is its own candle and it's unmitigated. Fantastic. Can we refine this if we wanted to the 50% of the candle? Yep. For the same reasons. He said we can refine to the wick. Okay, so let's ask another question. Can I refine this to this wick right there of that candle? Okay, everyone got this one wrong. No, you can't, except for 7. No, you can't. Because one candle, this is a mitigated wick into that wick. The refinement would be this. That would be a valid S&D. Again, keep in mind all the rules I just broke out to you. This candle on its own is not an MB because it's one candle. And this is the mitigation of that. So we need to keep that in mind. Again, all these tiny rules are going to affect you big time if you don't understand them because you're going to be wrong multiple times. Little details do matter. Yes, they do. Exactly. Now, let me ask you something else, though. So here's the 50% of that candle. If I take another 50%, can I refine to this? The answer is yes. The answer is not no. It's a yes. Because you're refining the 50% of the actual up candle, which is still unmitigated, right? This candle is unmitigated, which means the 50% of it are also unmitigated. So those are refinements that can be had. And that's important because what you could do is you could jump inside of it and find the unmitigated portions in here. What about the wick? If you just did the wick, this is mitigated. Again, small things like this is only important. Why? Because of this reason, okay? So this is why it's so important for even these tiny things, why it's important. Here's why. Because making this refinement might make price come in, you start confirming it, and then you lose. And the loss is based on the fact that this area was actually already mitigated. But this 50% might reach up into it, and from there, you'll get the confirmation off the actual unmitigated zone within here that does run. And just with that tiny refinement, you've saved yourself a loss. But if you looked at a zone like this on a monthly versus a 4-hour, this is going to make a huge impact because this monthly zone right here is going to be about 200 to 100 pips, which means you can be wrong for 100 to 200 pips by not understanding proper refinement. Do you understand that? Those are tiny things that in the grand scheme are going to very, very drastically affect your analysis. This is why you need to understand very, very perfectly these specific rules here. Very specific, okay? It might seem crazy, but again, you apply this to a monthly and we get a little crazier. Now, let's talk about why I had the zone I had on here, okay? So I had the 0.5. So now if I play around with time frames, so that's what I did personally, I come to this right here. Now let me ask you guys something again. Is this low right here to this high a unmitigated zone? Is it a valid zone to use? So a lot of people said no, but again, is it more than one candle, guys? So what does it make it if it's more than one candle? An MB. And what is the rule behind an MB? It is always its own unmitigated zone. Therefore, is this refinement on its own, let's make it blue, a valid refinement? Yes, it is, because it's an MB. Then, let me ask you, if I took 50% of this, is that refinement a valid refinement? Yes. And now guess what, guys? Look where my zone came from. You see that little 0.5 right there? Look at the zone that I used. Now let me ask you, why do you think I chose to use the 50% of this move here and not a different time frame? What happened there? Why? What about just this move here made me want to use that MB instead of any other one? Like this low to that high, or this low to that high, or, you know. Volume. This guy got it. Koalis, amazing and clean. Yeah, this is good too. It's because I can clearly see from a volume perspective, huge buys came in on this candle right here and instantly bought up into it. So something is telling me and screaming at me that the huge manipulation or buys before the sells came in this candle here, and then that's where the big move down started. So this is the MB that I liked. You could have used this. You could have used, you know, back here or this one here. I chose to use this one because that's the cleanest one to me. Now, in the case now, this is what, and again, here's why it's so important. Again, you guys, you use this one right here and you have like almost the same zone. But if price comes here and starts going short and you're confirming shorts and then it comes up here, all these shorts could be losses. And all it took was a minor refinement to keep you out of potentially all these shorts. Again, very, very important to recognize how tiny details prorated from a maybe higher time frame to a lower and prorated to understanding what you're confirming with on lower time frames can completely affect the actual confirmation. Why not include the previous wick? That's exactly why. Because the main buy that I see came in from here. Because that's where the big move started. Here, it was just a down candle that, you know, had some up movement here. I don't care about that. I care about where the volume came in. This is volume to me. Slevin, why not further refine? So for me, why not further refine? Because I know that I'm not going to be confirming this zone with an instant 1 minute. I want to give price space to be confirmed. So what I'm going to do most likely is follow a 4 hour or 1 hour new displacement to then refollow on a lower time frame. You understand that? If I wanted to only trade a 1 minute, would this be an area I should refine to? Or should I go further? Further, exactly. Yeah, I should go further. So I'd have to go to like this wick. Now let me ask you, is this wick a valid refinement? Yes, it is. Now what if I wanted to go further? Is this wick right here a valid refinement? Hey, we're getting it, boys. Now we know the rules behind S&Ds. That's right here. That rule's there. So make sure you write that down after. But very good. It's a mitigated S&D because I've seen people send me this. Now let me ask you one more interesting question. Can I refine to this? Is that a valid refinement? Okay, so some people said no. Now let me ask you guys, is this more than one candle? Yes, it is. So what does that make it? MB. So what's an MB with my rule? An unmitigated piece of price. So again, guys, so vital that you understand these rules because again, you prorate these to higher time frames, you get really shit zones and you don't understand why nothing is working. This is where this misunderstanding comes from. You can see we have a number of people here and still there's some confusion and some no's when there should be all like yeses or all no's, whatever it is. This is why there's confusion, right? You guys can see it, but it's all there. It's all here. So does everyone understand why I had this 0.5 selected for myself? That's where I literally analyzed it. That's what I had. Now, we're going to talk about further refinement now. Let's say you did want to trade a 1 minute. Let's talk about this zone here. Is this zone a valid refinement like that? Not just for a 1 minute, just in general. Is this an unmitigated zone or not? Someone said nope again. Okay, guys. Is this more than one candle? Yes. What does that make it? What is an MB in that case? Unmitigated. So can we use it? Yes, we can. Bob the Builder. Yes, we can. Okay. Here's another zone within that bigger zone. Can we use this one? Okay, I'm seeing all yeses. That's good. Very good. And again, for the same reason. More than one candle. This is can we use both of these zones? Can I go like this and just delete this zone and just use this whole thing like that as a zone? Someone said no. Yes, you can. It's just putting them together. So it's still the same zone. It's still an unmitigated zone. Yes, you can. They overlapped each other, right? Fully unmitigated and more than one candle. Therefore, unmitigated and usable. Great. Now, does it make sense? So let me tell you guys really quick. This is about a 70 pip zone. Does it make sense to confirm this area with a 1 minute candle? With 1 minute candles? I'm seeing no. Very good. Why? What are you most likely to experience if you confirm to the 1 minute or below? Significantly higher amounts of losses. Yeah, exactly. So again, very important because so many people start confirming this and start getting wrong, and they wonder why. So what can we do instead for this zone? We're fine. Yep, very good. So let's jump down lower. Let's go to like a 15 minute just for fun. I'm just doing this for fun because I traded off this, right? But we're going to do this just for fun. So 15 minute. In the case that we want to refine this whole zone, we can do a number of things, okay? Number one is, how can we refine to a smaller... Basically, let me ask you this. So we already know this is valid. Is it valid to then take this further and say, I have an MB here. Is this an unmitigated zone that could be a refinement? Yep. Very good. Exactly. It can be. This is a good refinement. Can we refine to this up candle right there? Just the one candle. So a lot of people are saying no. So let me ask you again. Is there a wick coming into this candle? Does that make the zone unmitigated even though it's one candle? Yes. So therefore, is this one candle a valid S&D zone? Someone said no again. Yes, it is. It's unmitigated. Nothing came into it. Broke down, never retouched it. It's a valid S&D zone. Right? Very good. Can we, let's make a higher refinement here. Can we refine that bigger zone to just this MB right here? Yes, we can. Very good. Yep. Yes, we can. Can we refine this zone to this, even though it's tapped into there and there? All right. I'm seeing all yeses. I don't have to go through the rule again. Very good. Correct. Oh, Dean. How many candles? Is there more than one candle in here, Dean? Does that make it an MB? Does that make it unmitigated? As a rule that I teach. Very good. So is this zone valid? Okay, Dean's back on. All right, can I refine to here? Is that a valid zone? Yes, we can. All right, we're getting there, guys. Now everyone's getting the S&D. Great. Phenomenal. Can I refine this to this? Someone said no. So let me ask again. Is there price tapping into this S&D? There's not. So is it an unmitigated zone? And is an unmitigated zone valid? Yes, it is. Very good. So this would be a valid zone. Now, based on this MB, what SND also mitigates into it technically, if we were to think about this from a fractal standpoint? Would it be, would this be a valid zone to also use as an unmitigated portion? So Stefan screamed no, Julia screams no, Martin screams no. So let me ask you guys, is this more than one candle? Does more than one candle make it an MB? And if it's an MB, is it an unmitigated zone? So now that it's an MB, can we use it as a valid zone? Yes. Again, guys, now you're very quickly seeing how even after about 10 tries of this, there are still people that don't like, it's like, nope, that doesn't work. This is why a lot of people can and do get really confused with their own personal trading and analysis and all this stuff. So now let me ask you further. Can I refine this to just this wick right there? Yep. Very good. Why? It's unmitigated. Very good. We don't even have to go through it. Everyone's saying yes. You guys got it. So if we wanted to trade a 1 minute, could we trade off this zone or this zone right now out of nowhere? Like if we wanted to, or like a 15 minute or something. Yep. Both of these are in unmitigated zones. Therefore, look at how we just took a zone of this size and made it into that by refining. Right now, I don't know where this actually goes. I'm just refining it like with what I believe is the truth, right? Because here, if we follow this, again, you do have this unmitigated portion here, but that's part of this MB and part of this MB, and that MB is getting clearly liquidated by this triple M. So for me, this move that broke down came from this up move. So that's where I refined to. That's the only reason I chose that one. I might be wrong. It might go higher, but I like that. And then we can even refine this even further just for the sake of explanation. So let's see. Can we refine this to this wick there? Yes, we can. Very good, guys. Very good. Can we refine this whole thing? So let's do another. Can we refine this whole thing to this wick here? Yep. Very good. Yep, we can. Can we refine it to this right here? Yes, we can. Good shit. Okay, and then based on this movement, if I was to ask you, just from a standpoint of context, does it look more so like price came from 1 before it broke down the MB or the MB, or from 2 before it broke down the MB and the MB? So a lot of people are saying 1 and a lot of people are saying 2. I personally would vouch for number 2. Why? Because that's the last up move before it broke through this, right? So I'd vouch for 2. This feels like it's just out of place, right? This is the price action that looks like it stopped before flushing out through this last up candle and these last up candles here. Okay, yeah, so someone just asked, can we refine this whole thing to technically this guy right here? So here's a good one again, but can we do that? Yes, we can. Good. But since we have 2 other unmitigated zones above it, should we consider just not using this at all? Because then it would make our zone basically this big, right? Yeah, we can. So that's why I didn't even consider this, because there's already clear zones above it. And by using all of them, we're back into striped pajamas. We need to be able to refine and choose our refinements. So for me, this is what I would do and set my alert and wait, right? These would be the zones I'd be watching for. Both of these make the most sense to me personally, right? Why didn't I use this one right here, guys? So even like, think about this. This MB got mitigated by this move. And why didn't I use this guy here as an S&D? Yep, it's mitigated. Exactly. Right? So what it's showing me is if price wants to remain below these mitigations, it should go after this mitigation. And if it wants to go above it, it's probably going to go after this mitigation. Does everyone understand that? Okay, cool. Now we can take a look at what price actually did. I don't actually know if it hit these or not, because I know price came up here, but we can still see this refinement. I'm not going to go further through refinement. Let's just break this down and see what happens. So we're going to just go up here to like a 4-hour, maybe a 30-minute, draw these out. Sure. So this is basic S&D refinement. This is not S&D 2.0s or anything like that. This is just basic refinement, okay? Basic refinement. This is section 2 material still, okay? So we're just going to play this forward now, see what price went. And let's see how decent our mitigations were if our refinements were good. And we should know pretty quickly if our refinements were good. Okay, so we got a new breakdown. Now, what time frame was this original low created on that we were looking at? Again, we need to be consistent in remembering what time frames we were on. It was the daily. So people that are saying daily, very good. This is why it's also important to continuously remember to yourself where your analysis is coming from. It's the daily. Now, let me ask you, was this a new breakout structure to the downside? No, it wasn't. So are all these zones, if we just refine them, still valid? Yeah. Why? Because they're still part of the same MB, right? And we still have the 1 MB down. Remember, we did all that just from the 1 MB down. That's it. From the 1 MB down. Now we're following price. And look at this. Already, people that are following just the MB are going to be taking a shitload of losses here, especially on a lower time frame, because there's no connection between the kind of time frame they're confirming with the type and size of the zone they're looking at. Very vital, again, for your understanding. Let's jump down again and watch what price does. So we know this is still no need for refinement, and we're just waiting for our alerts to go off or whatever, right? Let's see if it comes for the zone, if it's clean. Let's see if how clean the mitigation is, if it is clean at all. to see if we would even get a trade off of it. Because we have our refined zones now. Go faster, dude. Go faster. Okay. Was this a potentially tradable area off that 1 minute and stuff? Yeah. And look at that. Would you have gotten more than one loss or one break even if you confirmed the size of an area? Yeah, probably not. Exactly. Why? Because we chose to refine the zone to an area that permits us to either, one, be completely wrong instantly, right, and not even get a trade, or two, get into a trade and be correct about it. That is why refinement is so important, because we've chosen to use a size of a zone that allows us to be wrong once or be right once, and that's it. And that's how we've just taken ourselves from taking thousands of 1 minute losses, right? Because this is all a mitigation of that MB, right? Boom, mitigation. 1 minute losses, 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 potential wins, losses, 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 because this is all a mitigation of that bigger MB. This is why you need to understand fractals and why they're so important in the form of, you know, waiting for a zone, and when you refine, allowing the zone to fail. Could this price have came here and went short and continued delivering short randomly out of nowhere and just kept going? Yep, it could have. And would we have cared now that we understand what we understand? No, because we just wait till the next move. Exactly. Okay, let's see how our next zone fares. Is this a good enough play off of here if we took it off that lower time frame? Look at this. Does it make sense, or are we going to be confused if price comes back up? Okay, and now you understand how bearish markets can become bullish again, how can take out your highs, can take out the MBs that broke down, can break out of the Wyckoff, blah, 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 blah. We don't care because we're aware how price moves now. Let's keep watching it. Price comes all the way down, starts coming up. When it starts making these breaks of structure on the inside here, should we be following longs, or should we be waiting for a zone that we've refined to follow shorts? Beautiful. Why? What do we know is true about this market if we started following longs on this beautiful mitigations? What is the market already showing us on a higher time frame? What is it screaming at us? It's screaming context that may be potentially bearish. Therefore, we don't want to just try and take this up just because it's breaking up. So again, examples of where structure is shifting, it's breaking up, your lower time frame candlestick structure is bullish in a bearish market. Oh no, what do? We can step back. Many people have the issue of, oh my God, the confluences, the time frames don't agree. Look at that. We don't need them to agree. Okay. Let's draw this out. All good. Okay. When price gets here and goes short, should we cancel this zone because it didn't tap into it and is already moving short? Okay, no, very good. Should we go and start taking shorts because we know it's hitting the MB and the unmitigated portions, but it's not hitting our zone? Nope, exactly, we shouldn't. But a lot of people at these moments in time will do this and they'll say, no. Okay, it's hitting it. I need to follow it now. And guess what? If this does come back up, those are extra losses that they're just adding to their bottom line. And again, imagine this wasn't from a small zone. Imagine this was from a daily to a 5 minute. Imagine how many losses they'll take on the 5 minute here before it does the actual move. This is where unbewildered confusion comes from. When you do not understand how to, 1, wait for your zones, 2, allow your refinements to play out, 3, allow the markets and the conditions of the context of the markets that you've drawn out to actually work, and instead play this emotional game of, oh, it's rejecting hard, right? Is this, by retail logic, a big rejection that's probably going to mean it's going down? Yeah, it is. Many retail and smart money is looking at this going, okay, fuck, refine, okay, we're good, okay, CS, maybe FMB. Anton taught me the FMB. Let me get short. Let's see. Okay. Oh, tap me in. Okay. Oh, FMB. Okay, FMB. Oh, fuck. Oh, but it came perfectly to the zone that I had before. And now I took extra losses that I would never have taken if I properly followed the rules taught to me and used the proper frame of context. Now, is there a trade on the 1 minutes in here? This is what understanding proper refinement of zones looks like. These are all opportunities, infinite opportunities. Again, guys, I didn't even catch a single one of these. My opportunity was all the way over here. You guys understand that? All this happened before it ever came to my zone. All of it. Okay, I have to take a piss. Let's take a 2-minute breather. Everyone get some water and stuff. I'll be right back. 1 second. Take a piss, whatever you guys got to do. 1 second. Okay. Hello. Is everybody back? Generally. Yes, we can. Yep. All right. So now we understand, first of all, how refinements, S&Ds, the thought behind S&D refinements basically is built. Again, I didn't trade any of these zones. I traded way later, but I'm just showcasing where this zone refinement comes from. Now, again, let me ask you, all these mitigations are happening now. Price is moving short. Is this zone invalid now, or is it still valid? Still valid. Yeah, exactly. And why is it still valid? Is it still part of a potential MB? And on what time frame is that structure an MB from? The daily. Great. So now we're thinking about, we're now considering multi-time frame without forgetting where we are in a trend. Even when trends break down and do all this crazy stuff, we are aware of our higher time frames because, again, we function, and I'm going to remember to make my screen smaller again. We function under a thought process of big, higher time frame within the lower time frame, interloping, together, working, not this shit. So we need to constantly be aware of where this is if we want to succeed by doing this stuff right here. Okay? Let me make this smaller now so I don't forget. Okay, it's smaller now. We're good. We marry them. Exactly. We marry those time frames. So let's go back to the daily now to actually set up the precedent for my trade and play it forward. So for me personally, let me just ask you guys, based on what I like to do, would I be using this low or this low for my next break? 1 or 2? So we'll call this left one on the 1. This one will be 2. So a lot of people are saying 2. It's not, you're not wrong. You can use whatever. For me personally, I use the 1 until I get a displacement below this, because this was a swing low created, right? Until I get a displacement below this, I'm just looking at all this is just absorption. Like there could be a wick here, but I'm looking for the overall move to be like this, okay? Because this would all just be absorption. Until there's a displacement here, I'm using that as still my low. It's just swing. I'd always use the swing low until it breaks below, and then I'll follow my rule again, right? So we got those refinements. Let's delete those. Let's keep playing price forward, okay? So price comes up. It's mitigating what? What is it mitigating, first of all? Just the MB, right? Yeah, it's mitigating portions of this MB, exactly. And the multiple refined zones inside of them, right? And look at that. Remember that zone we had refined here? Look what it resulted in. Does anyone see what it just resulted in? A runner, a complete runner that went to new structures off of an already clean thing. So again, if you even traded that, which I still didn't trade, I didn't even trade that. You had a beautiful multi-100 RR runner that came to liquidate the low. Now, what is this? Is this a displacement for me or not for break a structure? Yes or no? Yeah, it is. So now I'm going to ask one more important thing. Is this zone that I have here valid? So someone said no. Now what is my double MB rule? He means yes. Yep, the MB1 and MB2, hello, are valid. This is this step. This is what's happening right now in a bearish sense. You have a double MB. This zone here and this zone here are both valid. Both valid. Now, part of this double MB, where did that come from? Let's play the same game. Let's follow my structure rules, okay? Was there a high that closed above this candle's high? No, there wasn't. Was there one here? Nope. Was there one here? Still no. There's no candle closing above that candle's high. I don't see it. Was there one here? Nope. Was there one here? Nope. Was there one here? Oh, some people said yes. It's still no. The candle after the candle's high did not close above it. There's no displacement there. I don't care about this candle here. We care about the candle after the candle. Always. Did this one meet the rule? This high? Nope, it did not. There was no candle close right after the candle that came above it. No displacement. Did this one meet the rule? Yup, it did. Here's a candle displacement above a previous candle's high. And after that rule happens, I need to pinpoint the highest high. So is this the highest high after that rule happened? So where's my protected high of the second MB? Right there. That's it, right? So let me ask you again. Is this MB already valid for sells? Yep. And is this MB here valid for sells? The whole one? Everyone's saying yes. Very good. It is. So to put it all simply together, is this whole thing, if I really wanted to, like that, valid for sells? Yeah, it is. So again, if I did analysis like this for you guys every day, every week, I'd be always correct most of the time, like 90%, because again, price can come here and then it can go, and that's it, and I'm correct. End of story. That's retail for you, right? If I really want to do retail signals, I could just do this, and that's it. This is a technically valid trade under the premise of what I teach here. That's valid, but it's not going to help you. It's not going to do anything for you. It's actually 0.15 RR, right? So again, we have a valid zone here and a valid zone here, right? All good, great. And we know we can refine further into here. So let me ask you, is this refinement here of just this wick right there valid? Let me move this up. Okay, yes, yeah, good. No no's, I love it. Yep. It's not its own MB. You're wrong about that. It's just its own SND, right? One candle, but it's unmitigated. There's no wick tapping into it. So that could be a refinement for you. Now, this is where a little bit of independence comes in. And remember, guys, one more time, is this zone up here that I refined earlier valid or not? Yeah, it's still valid because it's still part of the double MB. Now, let me ask you something else. Theoretically, if we had price pullback, meet the pullback rule, and then break again, is my MB zone here valid? Very good. Love to hear it. Exactly, it's not. Because at that point, this is no longer a double MB. It's a triple MB or more, or a MB cluster. And at that point, this would never be valid for me. So that is how zones invalidate over time. Because again, even though price doesn't need to come here. We don't know if there's orders resting here or not. All we know is price could come here because of the double MB here, and it could be still valid. But if it keeps going, we instantly understand and assume that price was only going after this MB here at maybe the 50% at the refinement that we made prior. That was actually like right there, right? And then moved away, and that was enough for it. But right now, at this given point, with no other breakdown, with the double MB being here, we are currently at this step of the process, where both zones, they're protected low of each zone, so in this case, the protected high, are valid areas for you to use S&Ds. And what can we also do? We can go inside them and refine them, right? That would also still be valid. Okay, cool. So we understand all that. Now, this is where a little bit of independence and personal choice comes in. Is it valid for you to look for trades off of, let's do one more thing, off this low to this high right here? Is this a valid S&D or a valid MB or a valid unmitigated zone? Yeah, it is. Very good. Because of the same rule. It's more than one candle. Therefore, it's fine. Is this a valid zone? Okay. So people are saying yes. How many candles is this zone from low to high? It's 1. Is this zone mitigated? So can we use it as a valid zone? No, we cannot. Again, guys, like, it's crazy to me, right? Think about this. Think about how many of you are getting this wrong, even though this is like kind of full-blown taught, but you know, you have to experience it over the process of the course. There's a lot of problems you can make. No, it's on MB. It's not. Yeah, exactly. It's not. Is this a valid zone? Okay, again, how many candles is it, guys? So if it's 1 candle, is it mitigated? So is it a valid zone? Good, it's not. It's not a valid zone. Again, guys, how many of you just said yes after we went over the same example a second ago? Think about this. Okay? Be careful, boys. Be careful. So now this is where a little bit of independence comes in. We're aware that, let's say, you know, this is a valid zone right here, okay? And there could be refinements in here that are valid, right? So let's ask you a quick question. Is 50% of this right here a valid zone to use like that? Yeah, it is, exactly. Because it's 50% of an MB, and an MB is its own unmitigated zone, and the 50% or 50% refinements of an unmitigated zone are what? Unmitigated zones, right? Again, that same section 4 rule. Again, something that you might have even overlooked. A small little line posted on 12/01. What is that? January, March, April, May, June, July, August, October, November, December. On December 1st, 2021, a small little rule that was posted has this much effect on what you're actually doing on the charts. This is why this needs to be, you know, read and understood. I don't understand the pullback on this MB, brother. The candle that closes above a previous candle's high puts in motion a valid pullback, and then you find the highest high, and that's it. If you don't understand that, watch more course content, watch more webinars, watch more outlooks. If you further don't understand it, you can take a one-on-one, and we can go over that rule over and over and over again. I even have one-on-ones where I speak about the rule as well, though, okay? But the MB is also mitigated, right? Nope, because it's an MB. It's a fractal understanding to the market. So you'll have to rewatch this after, and you'll have to learn about MBs because they're fractals. Yeah, watch the course. Exactly. I'm not going to go through the 30 hours of MB content right now. It's going to be crazy. So now that we know that this is a valid zone and this is a valid zone, right? Have we all agreed these are 2 valid zones, right? Because this is a refinement of an MB, and this is also a refinement of an MB that we then went further down and refined to that 1 up candle. They're all valid. Now, this is where personal preference comes in. You can trade any of these zones, and that's fine. These are all valid. They're not wrong. However, this is where I'm going to ask you a question. If you are someone that wants to be only correct or wrong once for the patient side, should you only be waiting for a pullback into 1, or are you still okay to use 1 and 2? Okay, so some people are saying both, but the answer is actually just 1. Because if you only want to be correct or wrong once, well, price can be wrong here once, and then you can be right. Therefore, if you're on the patient side of trading where you want to pick the best moves, can price come here and go short without ever tapping into this? Yes, it can. But if you want to be patient and sure of the last potential move, do you use 1, 2, or both? 1. Exactly. Because by the time price gets here, either the double MB here is going to hold as an absorption now, or it's going to fail and the whole context will be gone. But do you guys understand how from a independent perspective, this is where a lot of choice comes in? A lot of you can, and it's valid, to refine some zones in here, in here, in here, in here, off of the double MB into the 50% MB. All of that is valid. However, based on the kind of trader you are, in terms of context, you need to determine for yourself when you want to be involved and when you don't. And if you're someone that wants to get the most pristine moves that are right or wrong on the one time that it's there, you need to use the upper zones, which means, once again, you're not going to be trading most of the time. You're going to be wrong most of the time, or quote unquote wrong. You're going to be, here we go. You're going to be wrong most of the time. Wrong. You're correct, you know where it's going, but you can't actually trade it because you're waiting for the last possible moment. However, every time you do that, when you do get those moments, you're either wrong once or a few times, or you're right in what way? Huge. Just like we spoke about the initial, oh, wait, almost fucked up, guys. Just like we spoke about the initial break here. When we had the initial break here, when we had those two zones, 1 and 2, same thing. Should we use 1 and 2, or do we only wait for 1? If we're patient and we need the last move to be right or wrong once, we use 1. So you would have used this, and that would have done what? You would have been right in this case once, and it would have resulted in the move to new lows. Do you guys understand that? Okay, so now, section 4 material-wise, we've created a double MB, and we've foregone using the second one because we still expect the first one, which means we're instantly expecting the absorption of the second MB, right? Does everyone understand that? Which is also, by the way, interestingly enough, one of the confirmations taught to you. MB1, MB2, watch for the absorption to continue the move. So theoretically, if you really wanted to, off a very, very small basis, off a higher time frame basis, can you take an entry, theoretically here, or reconfirm this area right here? Just like that. Right? Do you guys understand where that confirmation now comes from? Again, I'm not using that confirmation, but that's where it's coming from. That's what's going on there. That MB is being absorbed as a double MB, and now you're getting the trade. This is how everything here comes together. This is why it's so vital that you understand every element of it, because if you don't, well, then small mistakes prorated to higher time frames, prorated to bigger moves comparatively, are going to affect you in such big ways that you're going to be completely confused by the time you get from like a weekly or monthly all the way down. Is that basically inducement? You can call it whatever you want. It's basic redistribution from an understanding of double MBs. People can call it whatever they want, but these words are only going to confuse you because you're going to keep thinking that they have some value. They don't. You follow MBs and there's rules to MBs. You have a double MB, price can be here or here. If it gets above here, trade here. That's it. You don't need to know this is inducement or redistribution or any of that shit. All you need to know is that there's valid SNDs or MBs within those two zones, and now you can trade them as part of a context and narrative of the market, right? Calm, bro. I'm calm. I'm chill as fuck. We're chilling out here, bro. We are chilling. I'm having a good time. So, notice what price does. I mean, lo and behold, right? Fancy words make good mentors even better. Yeah. Better at taking all your money, bro. For sure. So does everyone see? Let's go back to webinar 76. Webinar 76. From a while back. Let's go to Euro GBP. Does everyone see where that zone comes from now? Okay. This up here. That's the same zone. You guys understand that? And then it moved away from it. So let's go to where we were last week with this before I sent everything out like I did. I think it was off the 4 hour. And we had a few candles coming up on the 2 hour. So let's do this. Let's break it forward a little bit. A little bit more. Came down. We were here. This is where we did the outlook. Okay. So what are we aware about the daily, guys? Before we even go to the lower. When we look at this, instantly, what are we aware of? The market is bearish. It's created a double MB to the downside from an already previous what kind of market? From a previous multi-MB bullish market or an MB cluster-based market, right? Very good. Relax, everyone. Relax, everyone. So now that we're here, are we expecting... First of all, let me ask you this. Is this a break and displacement to the top side? Is this an MB1? Yes or no? So Dean says no. Are the rules for an MB met here? Is this a displacement up? So in that case, is it still an MB1? Yeah, it is. But due to the context, even though this MB1 is being made, would we assume instantly that it's going to be a redistribution or an absorption or a continuation up? Yep, absorption. We're expecting instantly, based on our double MB rules, that we want to continue short. And that's exactly where Section 4, mentfx special, and that's exactly where this idea for my entire trade plan comes from. Understanding that a double MB can get invalidated and create a new MB to the downside, but still be valid to the top side as longs. And this is exactly how you have this idea where, oh, candlestick structure or higher time frame structure shifted bearish, but the institutional structure is still bullish. This is where people get fully confused, don't know what to follow any zone they can, striped pajama, blah, 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 without following just simple, basic rules in accordance with the left to right functionality of what I teach here. This is the Holy Grail. Yeah, this right here is all you'll ever need, but you need to understand the nuances behind it, because notice how even after all these months, there are people, even after multiple examples, don't still fully understand these basic unmitigated principles of mitigated and unmitigated zones, which means that it's affecting them in a big way, right? Okay, so even though this is a break up, let me ask you this now. Was my pullback rule met here? I'm gonna zoom in for this. Was it met here for that pullback? Yep, right, a candle closure before a previous candle's low. Done. Okay, so of this MB, where's the protected low? Is it this one or is it this one here? So we'll go like this. We'll go 1 or 2. Yeah, it's 1 because that's where the break came from. So now I'm going to ask you guys a question. Is it valid to use, let's say, this unmitigated, really refined wick, right? Unmitigated, for a zone to go long? Okay, so this is good. So a lot of you already said yes, which is good. It is valid. However, yeah, Vadim got it. So even though it's valid, should we do it based on the context of this market? Beautiful. No. And that is where a huge disconnect for a lot of people in the smart money space happens, because a lot of people get conditioned to think that because it's valid, because it's clean, because it's unmitigated, they need to catch it. They need to be back and forth. They need to ping pong their trades. And guess what happens, guys? Right off it, straight through it, right? And you could have potentially caught this, but what you're doing is you're creating events or points in time where the mitigation might be minor, so you get no really good trade and you could just even get taken out and lose, instead of allowing yourself to set up on these trades that can run big time, just like this one right here. You understand that? So even though a lot of you are correct, it's valid, is it a good one to use in relation to the context? No, it's not, right? If the pullback was above MB2, would MB1 become liquidity? You can treat it as liquidity. You can do whatever you want, but this is the liquidity of the entire range. These are all intermediary liquidity. That's it. All these lows are this one too, this one. These are all intermediary liquidity. You understand that? This is the main liquidity, because that's part of, right, section 1, this institutional structure range. So the expectation is that. That's it. That makes that the biggest point of liquidity. That's it. We don't need to confuse it. We don't need to go crazy about it. Now, let me ask you guys something else that's really important. Based on left to right structure, right now, because this is recent price now, is this now a displacement to the downside? Yep, it is. Now I'm going to ask you guys something really, really interesting and important. Is this displacement what I would consider on this time frame real structure or intermediary structure? Okay, so this is where a lot of people are going wrong. You guys are wrong. It's real. Why? Because from a standpoint of left to right, if we ignore double MB rules for a second, this still broke up, made this high from this low, and then broke that. So why would that be considered intermediary structure if it's breaking the left to right structure? You guys understand that? So based on a principle of the double MB, this is a structural leg. However, despite that, that is a structural leg and that's the institutional range we're in. We are still within the proper rule based of the left to right rule. And that left to right rule still allows this now to be a proper and correct MB1 that's not intermediary. You guys understand that? But now, what does this MB1 to the downside within the context of a previous institutional leg double MB really set forth for you? Bias. A super clean context, right? Because now you're having MBs, double MBs that are creating higher time frame structure line up with lower time frame left to right structure that are now valid to the downside. So now if I asked you, based on this, would it be a smart idea to look for a ton of sells at this unmitigated S&D right here if price came back here? Yeah, it would be very, very good. If price came here, I'd be fucking like a dog. I'd be slithering at the mouth. I'd be slobbering if price came here because of this context, right? Because even though we exist within this low to this high from this institutional, we still need to be aware of what? Of how we view structure. How do we view it? Who knows? Left to right. Very good. Thank you. From left to right. And from left to right, this is a break up. That break happened from here and then broke down, and that's a new break, MB1 to the downside. Now, let me ask you something. If this wasn't the pullback and this was the pullback, would this break here be an MB1 or an intermediary structure? That would be intermediary. Exactly. Very good. So then, would it still be valid to technically use if you were profitable already? Yeah, it would be. Because I tell you guys, if you're profitable, you're fine to trade and work with intermediary because you understand what's going on. But if you're not, do not do it because, again, as you see here, there's so many small little nuances that if you're not profitable already with just the basic rules, which we can clearly see people have issues with still, like unmitigated, mitigated zones and stuff like that, then what makes you think that adding counter trend and adding intermediary structure is going to make you profitable? It's going to make it a lot harder, a lot more confusing, and what kind of issues do you think, so these are issues that people have in the smart money space, do you think you're going to have with zones and structure? Who knows? What are the good old issues that everybody has because they constantly try to counter trend and constantly try to use intermediate structure? What happens, guys? The zones never hold. Losses nonstop. Structures are all failing. Everything is fucking absorbing. Blah, 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 blah. And they quit. Very good. Exactly that. I'm going to go up here. I think I saw a quick question, so I'm going to jump to that, but no question interruptions for now. Hard to see exactly if it is displacement. There's because there's a wick and body so close. Yeah. Sorry about that. Forcing. There you go. Mr. mentfx, my zones are never holding. Exactly. So let's go back to the 4 hour, back to when this trade happened. We started looking at this on the 30-minute at, when did I send this out? This was all sent out to you guys. What time frame was this? Let me go back into mentfx trade ideas. Oh wait, I had set, there we go, webinar, this webinar. On the 2 hour, right? 2 hour. So we'll go 2 hour. And it was right here that we did our breakdown. Okay. So now, on the 4 hour, let me ask you guys this. On the 4 hour, is this a break of structure with displacement that I teach left to right here? Yes or no? No, it's not, right? So in this scenario, what is the 4 hour in? Is it in a bullish range or a bearish range? Yep, it's bullish. Now notice how I was taking sells inside of a bullish range. How crazy is that? Well, it's because we don't think in time frames, right? We think in price. So we're aware of what's happening here and what can we do to pinpoint an actual breakdown? What can we do with our time frames? What can we do to play around with these ranges? What can we do? Yeah, we can go lower or we can play around with the time frames to find a time frame that adds into the context we have at hand, right? So a lot of people, a lot of dumb money is going, okay, I'm going to buy here and I might buy a refined area here and maybe a refined area in there. That's them. It's bullish. I must catch my bullish. Instead, what are we doing? What are we exercising? What crazy skill are we exercising here, guys? Yeah, wait. It's called patience. That's the skill we exercise here because we're aware of what we're looking for. So when I did this outlook, I instantly jumped down because I don't care about this bullish 4-hour break. I care about what's going on inside of it. And what do we see on a 2-hour? Is this a breakdown on a 2-hour? Okay, it's kind of hard to see, but is that a pullback? Is that a break of a candle below a previous candle's low? Yep. So is this low the lowest point of that before the break up? Yep. So when that breaks, what have we created? From a standpoint of basic, what I teach in section 4. MB1. Beautiful. Now let me ask you, is this a valid area to start looking for sells off of when price comes into here? Yep, it is already. So you could have already getting trades. Now, if we did that, what are we most likely to experience if we were trading a lower time frame? Right? We're back to step 1 of the daily time frame, right? We can do the same kind of refinements. Is this a valid area to trade off now if I refine like that? Yep, it is. Is this a valid area to trade off if I refine it like that? Yep, it is. Very good. Is this a valid area to trade off if I refine it like that? Oh, someone said yes. All right, let's play the game. How many candles is this SND? 1 candle. Is that candle mitigated? Yep, fully mitigated. So can we use this as a valid SND? Nope. Nope, we can't. Now let's look at the area I used. Is this valid from that low to this high? Why do you think I chose that low to that high instead of that? Very good. So some people said volume. I agree, right? Because that's where you could say the up move started. And some people are saying imbalance. You're correct. Because what this does is it takes into account the unmitigated portion of an even smaller move. So now the expectation is price can tap into here and then go without ever tapping into this, thereby filling in portions of the unmitigated area while making it a valid zone. So that's the only reason I chose this MB. And again, small refinements that can have a huge impact because did price even reach this? I don't know. I think it did, but let's see. Okay, it actually absorbed it, so we're good. So in this case, either way, it would have been okay. But that's why that refinement was made. And in other cases, this kind of refinement has saved me so much money or made me a lot of money because not always does price come up for this. Because again, remember guys, if this was a daily chart versus a 5-minute chart, can this tiny refinement here make a huge difference based on your analysis of the market? Yeah, it can, right? This could be the tap that starts the move to the next low. That is why you need to be aware of, again, the kind of candlestick and structure you're looking for. And what I did actually is I moved between a few time frames to see the refinements. Let's look at a 1 hour. What do you guys see? Same zone kind of, right? Or refinement there, right? Let's go again. 3 hour. What do you see? Very clean up candle here. You could have really used that one. That's also really good, but I still use it from this low. 4 hour. What do you see? Perfect, unmitigated, hidden S&D as we call it. So with all that in mind, based on those multi-time frames, which ones make the most sense? Does it make sense to refine to maybe the 1 hour wick, the 2 hour zone, the 3 hour zone, or the 4 hour hidden S&D that is also part of those same MBs? Right? So again, this is again where some independence comes in. You make up your mind here yourself, but that's where that came from, right? That's where that zone came from. And I started following it that week, and guess what? It came up right through it on the 1 hour, right? Right through it. And it actually broke it, right? So let me ask you guys, is this a break to the top side? Is this an MB1? Yep, it is. Someone said no, it is, right? This was the high, this was the low, it broke up. That's an MB1. Now, but does this mean that now this clean, unmitigated S&D right here should be used to go long because it's so clean and it broke up? Or am I instantly expecting redistribution as a result of what we know is true about the higher within lower time frame? So instead we're going to either A, wait for shorts, or B, go to a lower time frame and look for the breakdowns on those time frames. Yep, we're going to wait. Exactly. And does it look like even if I tried to confirm it, was there a confirmation here? Nope. And just to showcase that, here's your 5 minute. Right out through it. Boom. That's a 5 minute. So you might even confirm even on a 1 minute. Maybe you get a breakdown. Let's see. Nope. Instantly through it all. Never a breakdown. That is the power of refining your zones. Now, guess what? If I just used a little bit of a bigger zone, that's potential losses. That's potential losses. And even that little break there could be potential losses. So I've added 3 to 4 maybe in here you get another loss, 3 to 4 potential losses just by not refining based on my understanding, my experience. You guys understand why it's so fucking important and why I teach this idea of refinement and multi-time frame refinement in confluence with each other. This is why there's no such thing as Mr. Ment, what time frame should I look at? You can't play the game that way. That's not how these markets operate. No institution is sitting there watching a time frame. They are not even watching a candlestick. They're not even watching candles. They're watching straight liquidity, like straight order flow. But when they get in, by understanding what's happening, we can see that order flow cross time frame. We exist on all dimensions. We are the space, you know? Whatever you want to say. So let's keep breaking this down. We're almost done for any of you that are still here. Yep, the actions of the composite operator or the composite man is reflected in the candles. It's not what they're actually using. I have so many people in my comments on YouTube that are like, bro, you say all this, but there's no institutions that actually trade the candlesticks. You're stupid. And I'm sitting there like, you are a fucking idiot for not understanding basic footprint as I teach it. It's a footprint. That's why I teach it as a footprint and a multi-time frame thought process, not as a this is what they're looking at. They see the candles. They don't give a fuck about your candles, right? Okay. But you guys can see why even when I try to make this like we're almost at fucking 3 hours, and this is why this happens, right? Because I can talk about this for so much longer, but I need to make it shorter. Okay? So now we have that. Let's go to when I started sending everything out to you. I sent out this right here, right? So let's see what happened there. That was on a 1 hour, right? Yep, 1 hour. So let's play it forward really quickly. Okay, so I waited. Now, is that a break of structure? Is that a displacement now? Yep. Now let's follow the rule again, okay? So the rule here, basically where people get confused is here's a low, and people go, is it from this high or this high? Now again, where was the rule met first? Was it met, let me just ask you guys, was it met right there? Was the candle close above a previous candle's high? Nope, it wasn't met there. Was it met here? Yep. This candle closed above a previous candle's high. Therefore, I need to find the highest high after the rule. Where is it? Right there. So what's the protected high? Number 1 on the left here or number 2 on the right? Good. So is this, let's say, is this MB right here? That's an MB. Is that a valid zone for me to use if price does come back up there? Oh, everyone's saying yes. Guys, if this is the protected high of that range, how and why would we use the MB here? Right? Again, you need to think SSC. I just taught you a lot of stuff about S&D, but now you guys just kind of throw away the structure. Again, we had price break the low, and for me, that came from this high. Why would we use any S&D up here when we know all of this above here is fluff? So this would never be a valid MB. Right? Now let me ask you this. Here's let's go even crazier. Is this a valid MB for me to confirm? Guys, where's the protected high? Is this area taken into account, area that's not protected? So is this a valid zone? No, it's not. It's not valid. Now let me ask you something further. Is this a valid area that you can now confirm? Yeah, it is. Because it's part of the MB that made the break and part of the protected price action of the actual structure leg. Remember, we don't think SC. We think SSC, which means structurally, we need to first of all make sure the S&D makes sense structurally. And structurally, using any area here is not part of this time frame's structure. Therefore, the only S&D we can use is inside of this area there. Does everyone follow that now that I've drawn it at least? Very good. So let me ask you further. Now that we know that, is this a valid S&D, or I mean MB for you to use to trade off? Yeah, it is. It is. Right? Can you tell me why this is only one MB and not two? Because we broke up left to right structure. We broke up MB1, and then we broke again down MB1. This right here is intermediary. That's not a break. This here is not a break. None of this. What is all this, guys, in here? Fluff. Intermediary structure. It's useless. We don't use it unless you're profitable. You don't even think about it. Yep. So then let me ask you guys. Is this S&D candle here an unmitigated zone? Yeah. Oh, someone said no. All right. Is this one candle? Yes, it is. Has it been tapped into after price traded through it? So is it a valid zone? Okay. Now, if I took 50% of it instantly, is that a valid zone? Yep. Because 50% of an unmitigated zone is always what? It's sexy. Yeah. It's always an unmitigated zone, even if it looks mitigated. Okay, great. So I actually personally refined this. I'm going to show you guys the refinement. And I'm going to show you guys why this even came into action. So you're going to learn a lot right here. This is where the advance comes in. So for the 120 of you that are still here, this is where advancement goes beyond everything you've probably done and thought about, because we're about to add another portion to your own learning. But again, add it when you're fully profitable and you know what you're doing. So how can we refine this? We can go lower, right? So what I did is I just jumped down, and you can see, let me find where I did this. 30 minute, 5 minute. Okay, there we go. Here's my refinement. It was this one candle. Is that a valid refinement from this high to this low? Yep, right. Price made one candle, but as it traded through it, it never traded back up into it. So there's an unmitigated zone there. That's valid. Done. That's where I was willing to sell from. That is what you saw this week when I sent out that right there. That's the initial send out. Okay. Now, I revisited this price to send it out to you guys again when we were right here. Boom. Sure, that's fine. This is where we revisited it. All right. This is where we get interesting. This is where you start to understand how you can play intermediary ranges and zones, or S&D 2.0s, into your analysis if you know what's going on. So what do we know is true about this MB from this low to that high? It's valid. And what do we know is also true about the way price tends to move? Can it tap into here and then go short fully? Yeah, it can. Right? So one thing you can do, this is where you utilize S&D 2.0s, is when you get a mitigation off of a larger zone, or MB, as part of a range, you can choose the S&D 2.0, even if it's intermediary, even if it's fluff structure, to trade it. Here's where the zone came from. Ready, guys? 15 minute, notice what happened. Price came in and traded away with displacement, leaving behind inefficiency. And this zone, refined by the 50% of a valid zone, right here, is the area that I almost sent out to you guys. Okay, so this is where it's coming from. This is just an up move before a down move. Doesn't matter what it breaks. It's creating an S&D 2.0 off of a previous valid MB. Okay? And because of the move away it had, the displacement it had in price, the whatever you want to call it, momentum, I was willing to utilize the last up move before the down move in here to take it short. You guys understand that? So this isn't based on any breakdown from left to right. It's not based on even an intermediary break. All it's based on is a time frame that's tapping into a large MB as part of a valid range, displacing randomly momentum, creating a S&D point. Now let me ask you guys, is this S&D valid right there? Yep, right, unmitigated. Very good. So now let's look at the zone I sent out. It doesn't look like it's that exact zone. Where did this come from? So what can I do to refine this? What are some of the things I can do? Just throw some answers out. I can do 50%. I can do the wick. Yeah, I can do a lower time frame. That's really it. Those are the three things. So I could do a 50%, another 50%, or a wick, right? Or I could go lower time frame. Very good. So in this case, what I did personally is I started by going to a 50%. Just around there. I kind of eyeballed it. I didn't know exactly, but I wanted a more pristine area to look at. Okay, great. Then I jumped to a 5-minute. Now let me ask you something. Is this a valid zone? Yeah. Not only is it a MB, making it valid, it's also an unmitigated S&D if you considered it as an S&D. So not only is it an MB, which already makes it valid, but it also incorporates the unmitigated price action of a maybe higher time from S&D and of this S&D here. That, and I'm holding my control here. So you can see how it's magnet. I'm holding the control. That's the low I sent. That's the refinement I sent you. And do you guys want to know what price hit to the motherfucking pip when I sent this? Does anybody want to know what price hit? Ay, ay, ay. Ay, ay, ay. Okay, so that's where that zone came from. That's where I sent it from. And that's where a little bit of that S&D 2.0 more advanced action comes in. Because notice how this zone wasn't chosen off of something on the left. It was chosen using an S&D 2.0 based on the understanding that we're mitigating an MB and momentously moving away. And after creating the inefficiency in unmitigated price action, I refined this to allow myself to trade off of two zones. 1, 2. And that's what you saw right here before it ever happened. Does everyone understand where this comes from and why, from an understanding of patience, higher time frame, context, the second MB refined area being hit after the absorption of the first MB, moving short, why I chose to use both these zones as valid zones. Yeah, and Kristjan's putting it perfectly. I churned more than 15 potential losses into none. Literally none. I took one win. That's all I took all week on Euro GBP. I took one win. That's it. I had one trade on Euro GBP. I followed it all week long. I got one trade. Okay? So, price comes up into my zone. Now it's a refined zone. Okay? Now, let's look at it. Let's delete this for a second. Here's a 1 minute. Price comes into the zone, and you have a 1 minute low here. Now, seeing from a standpoint of context how far this low is, can I use this low, or can I also consider going to a lower time frame to confirm a lower time frame's displacement? And, okay, so some people are saying lower time frame, great. Now, if I go to a 30-second, does this permit enough space for me to use a 30-second? Yeah, it does, right? Because in this case, it could break down, give me a confirm, and then go a little bit higher, and then do it again. But the reality here is, how many losses based on the 30-second basic movements are you most likely going to expect if it goes fully against you multiple times, even with confirms? More than one, but yeah, about two, probably two. The max losses that I could probably take here in this zone off a 30-second confirm is about 2. That's it. Right? Because of the size of the zone in relation to the kind of breakdowns and structures that deliver on the 30-second during this given point in time. This is where context comes in. There's no one time frame. So I waited. And this is where I sent out. What did I send out? We're going to play this play by play because I sent all of it out. Like, I've never sent it out like... I've sent out a lot of stuff, but I sent this one out perfectly. Boom, boom, boom. Like, as the time went. I sent out this low being broken. Right? Because why? Okay, this moved a little bit. It looks like I moved. What the fuck happened here? All right, well, ignore that. We're looking at this low to be broken. Oh, no, we're good. We're good. Right? So same thing as earlier. Remember the daily candles? Do I use this high or this high as my swing high? 1 or 2? Nope, 1. Because that one has still just been absorbed and not been broken. And then here's the break, displacement above, and that came from the rule being met from this low. So that's what I sent out, this low being broken. And I sent this out to you guys, right? Right? Beautiful. Let's relive it. So I waited and I got a breakdown. What is that? Is that a displacement or not? So am I valid to trade off of a confirm inside of this zone? Yep. Am I valid to trade off a confirm in this zone? Oh, guys. All right, let's go through it again. How many candles is this zone? It's 1. Has it been mitigated? Can I use this as a zone? Good stuff, guys. We cannot. So then we have to refine it. Can I use this? Yep. Unmitigated. And guess what I sent to you guys? Oh, I guess I didn't send it here anymore. I was just following it myself. But that's the zone you can use. Okay? And then did I instantly 1-second it? I think so. I got to relive this now too. But remember what we're having now from a standpoint of section 4. So let's go to section 4. We're about to end this out, by the way, boys. So we're almost there. So we've had a higher time from double MB. We're confirming in here, right? We've had price move away a multiple of times, make an MB1 or an MB2, whatever it is. And now we're kind of in this mode right here off the hourly. And then price came in right here on the 30-second. Oh, no, this was the hourly now as well within all these higher time frames. And now this is the 30-second off of that refinement of that 15-minute S&D. And we had a break. So can I confirm this now with an overall fully entry double MB? Yeah. And because it's a 30-second zone that's refined now, do I need to now reconfirm with a 5-second, or can I instantly get in with a potential 1 second if it's met? 1 second, yep. So let's see what price did. Played around, played around, played around, played around. Just waiting. Do I want to confirm any of these breakdowns? Look, we're getting an MB. Should I start selling? Nope. Can price run right now? Do I give a shit? How many times again am I going to experience this in my life? Billions. Billions and billions. Billions and billions. Infinite. Okay, so let's just keep letting it do its thing. No mitigation yet, I guess. I guess we'll just wait. Let's move this over. Oh, price is getting somewhere. Right, price is getting there. Let's go back to my mentfx strategies. Okay. Is that a tap? Can I watch it for a trade now? Okay, let's play the game. What created this high? Was it this low, number 1, or this low, number 2 for me, personally, based on my rule? Yep, number 2, because that's where a candle broke a candle closed below a previous candle's low. Therefore, it's valid to use this low for me. Okay, great. Let's keep watching it. Okay, it comes up again. Makes a new high. Where's the low? Is it this one still, or is it this one? 1 or 2? Sorry, 1 or 2? Yeah, 2, because that's where the low comes from. Can price come up and just fully invalidate now? Am I going to be in a trade? Nope, I don't give a fuck, because I understand I'm waiting for my confirm. There's no reason not to. We're at this part of the setup, section 4, wherever that image is. Okay, just remember the image. We're at the last part where I need a double MB off of left to right, usually, or MB cluster. Sorry, let's go like this. I need a 1, 2, and I can enter here or here, right? That's all I'm looking for. Double MB is my final entry off of multiple confluences. Okay, let's keep waiting. Is that a break? Is that a displacement or not? Yep, it's a breakdown. So that's an MB1. Great. Has there been a pullback yet for an MB2? Has there been a pullback? Nope, there's no candle close above a previous candle's high. Okay, let's go to the next one. Is there now a candle close above a previous candle's high? How about now? How about now? How about now? Yep, exactly. A candle close or open, it can be either just body, above previous candle's high. So if it breaks this low, is that going to be a double MB that I'm willing to now take for a trade? Okay, let's see if it does. And what place does it have to invalidate for me not to take it? 1 or 2? Okay, 1. So now we just wait because that's still the MB1. Let's wait. Is this a break displacement below? Someone said yes. No, it's not. There's no break. There's no candle break below the low. Okay, next candle. Is that a break below? Nope. Is that a break below? Nope. Is that a break below? Nope. Still nothing. All right. Is that a break below? Nope. We're just coming back up. Can price go long now? Do I give a shit? Nope. Does my analysis being wrong mean anything to me? Nope. Good stuff. Is that a break? Nope. Is that a break? Nope. All right, let's go a little faster. Is that a displacement? Do I care about all these inside breaks here and all these like inside breaks here? Why not? Why don't I care? It's intermediary. Yep, exactly. All right, let's keep going. Is that a displacement down? Yep. And is that a double MB? Yep, it is. And look where I entered. Is this an MB? Is there a super clear S&D within this MB down that I can use? No, there's not, right? There's not really. It's hard to spot one. I honestly couldn't spot it. So I think I got an entry either here or here. They were like both the same, but whatever, it is what it is. Came a little late. Either way, reaches back up into that. No problem. Let me actually double check this. Maybe it moved or something. Yeah, so you can see what happened is the FXCM had the same issue, but here's the real entry, okay? Because it had the issue. So in this case now, it changed up, but let me show you guys and draw it for you right here, okay? So MB1, like we spoke about, made the pullback. MB2, that's the unmitigated zone I entered on. You guys see this unmitigated zone right there? Empty area, right? You guys see this is the MB, right? That I entered off, right? You guys see that? So that's where that MB came from. So it was just broken on the, it just broke now, but that's what I entered on. And that's it. Let's follow my rules now. Because again, we're not even going to complete this without telling you all my rules for management. Because again, I want to make sure anyone that actually goes to section 4 after the entire course knows exactly what they're looking at. Can't understand 1 second. It's the exact same thing. Okay. So we are in now at this price. Again, this tapped in perfectly, but it just updated after. So it is what it is. Now let's play the game. Okay, well, it's actually fucked here. So what we're going to do instead is we're just going to play it off the Discord. Because, again, it's broken on that one. Okay, let's go off here. So again, we're going to talk about BE rules. So price broke. So remember it made this MB2 right here, right? Okay. Now, where did that MB come from? Did it come from 1, 2, or 3 based on my rules? Yep, so it's 3. I don't know who just said 1. That's way off. But again, there's a candle close or open above a previous candle's high. That's it. I don't care if it looks like Braille or not. The rule is there. The rule is right there. So are we, even though we're in the trade, are we in a bullish range or a bearish range at the moment in the trade? At this point, are we in a bullish range or a bearish range? Bullish. Because we broke this high and displaced from this low. That's a bullish range. We're in a bullish range now. Right? Then we broke the low from this high and it broke down. Now, did I move to break even at any of these points? Nope, I did not. Because what am I waiting for? What's my management rule? An MB below my entry price, okay? So then we get a pullback. A high above a previous candle's low, and then we got a displacement. So on this specific candle right there, am I at break even or not? Yep, because that's a new breakdown. This is a new MB right here. Here's your MB. That's below, clearly below price. And I moved to break even right there. And guess what? That took a few seconds for me to move to break even. And did price come back up there? Let's see. Nope. And it broke down. And as always, as I teach in my management, okay, because of the context, should I use a 1 second or 5 second double MB rule to exit the trade potentially based on the context of this market? We're not done, boys. We're not done. No, I shouldn't. Why? Why shouldn't I use my rule, my double MB rule, to exit in this market on this trade? Why shouldn't I use it? Yeah, because the market is screaming that it's bearish. So even if it has a potential double MB up, why am I not exiting on that? What do I expect this to instantly be? Absorption. Absorption. Now, if this market was EU, if this was EU at the moment right now, would I exit on a double MB on a lower time frame there? Yep, exactly. And why would I exit on EU and not EG? What did I say in webinar 76? Context. Not clear, uncertainty, bullish and bearish, and therefore, I don't know if I want to hold out trades. But on this, knowing the context we just went through, is the upside basically infinite in relation to this trade? Yeah, it's fucking insane. There's a huge, it goes from here to here, and then potentially further is the potential effect of this trade being correct. So in that scenario, does it make sense to use a lower rule to exit quickly or to look for ways to hold out into the longer trade? Yeah, hold. So I'm just going to use my basic management, which is 50% off at 10 RR. This first line is 10 RR. 50% off at 25 RR. 50% off at 50 RR. 50% off at, there was 100 RR here, or less based on the actual movement. So I could have done this low or this low, but I didn't. So these are the only partials I got, right? And first partial delivered instantly. This was all in one day. Second partial delivered so fucking quick. Notice what context does for me when I get into a trade. Second partial delivered. Third partial delivered instantly. All within the span of, guys, in 3 hours, I delivered to 50 RR on this trade. Now, again, I didn't make 50. I made 6, 12, 17. So about 17.5 on this trade alone. But one trade is all I took this week, and it was a 17.5 RR gain. You need to realize what you can do for yourself if you allow yourself to go through, one, the process, understand how important context is to these markets, understand how we actually utilize these rules together from a higher to a lower time frame, understand how we properly refine our S&Ds and can refine them, how we do not care about the psychological side because we're aware of what this market can give us, and that is where we succeed. And again, for people asking what are the RRs, all this stuff, you guys want to know what's in section 4? A full-on breakdown of this exact system, step by step, in addition to how I view it, in addition to the full-on management. It's all written here. I don't write the shit I write for fun. Everything I do, everything I utilize, the ways I think, the way I think about red news and when to trade, when I don't trade on Sundays or Fridays, things that I hold or don't hold over news or rollover, it's all written here. One sentence can change your life. So make sure when you walk through this course, you're seriously considering and thinking about everything I'm giving you. Assume you are paying me 30K. Assume you are paying me 100K. It is necessary because you need to soak the value like a fucking sponge out of what I'm trying to give to you here, right? Oh my God, my voice. And this is how the trade went. And then guess what? Guys, this trade, you want to know how much it reached? It reached 70 RR. And then it came right back up to break even. Now, let me ask you something. Am I sad that I got taken out of break even without getting another partial when it came to 70 RR? In the future, am I going to close at 70 RR because now I know that price can easily return back? No, because I'm not playing the game of, oh, but what if I just held? Oh, but what if this, what if that? I'm just following my rules. And I'm going to follow my management rules because that's going to do the work for me. Yep, Kristjan, I'm going to let the system do the work for me. And that is why, coming into this next week, we're back to following the bearish. And like I said, we just got the MB1 on the daily, refined zone up here as we need to, follow that down on a lower time frame. And if we get moves up into there, you know, like even if like this refined zone is still good within there, but you can like use, what was it? The daily had this high. Yeah, so that's the high. So we have this guy right here. Yeah, so we're inside of this guy right here. Yeah, so like this is a good refinement already. If price comes up here, do you think I'm going to be looking to confirm shorts? You sure as fuck bet I am. Now, to end it all out from a psychological perspective, is price likely to come up to my zone? Someone said yes. No, it's not. Not at all. It's much more likely to do this. Do I care if I miss out on this? All right, you guys got it. Welcome to section 4 and how I apply my entire system from a standpoint of higher to lower, psychology, refinements, thought process, double MB rules, 1 MB rules, refinement rules, S&D 2.0, and everything that comes with it. That's 3 hours. That's being added to section 4. If I see future questions on MBs or section 4 in this shit, you know exactly where I'm about to send you. All right. Thank you guys for tuning in. It's actually fucking crazy that 109 of you are still here for 3 hours. That is mind-boggling. All right, guys, bless you all. I'm not doing a outlook, of course, because we're 3 hours in. I'm literally gonna blow my brains. But thank you so much for showing up here. I'm gonna get this uploaded for the boys, and I'll see you guys this week in the trade talks. So go do your own analysis, go do your own breakdowns, and start looking for those contextual elements that make trades phenomenal. And if you don't have them yet, start from phase 1, work your way up, and apply what you're taught here. Because you can take yourself to infinity and beyond. All right, guys. Thank you so much.